All right, and I believe we are live. Welcome everyone to another edition of the Bitcoin Law Review with your host, Tone Vays. Now, usually this show brings you a bunch of lawyers that you all love and hate. Unfortunately, today, all you have is the one single lawyer that you all hate. So let's welcome Jason Steinberg to the show.
Hey, Tone, thanks for having me. I want to say, if it's not evident, I am 6 feet away, practicing my social distancing. Also, I'm doing my best to self-medicate. I have plenty of quinine here in various liquid forms of delivery. And I'm a dog guy, not a cat guy, so we don't have to worry about my dogs passing any COVID-19 on anybody in the audience. So with that, cheers, everyone. And I will say this for the record, I have not and have stated affirmatively will not watch a single episode of Tiger King. I'm just not going to do it. I'm staying away from that.
Why? What's wrong with that show? I haven't seen it. I know nothing about it.
If a train wreck were to wreck into a dumpster fire that was filled with plague-filled bodies, that would be the show. It is like the worst representation of culture ever. And the fact that everybody's sitting at home bored out of their minds and have nothing better to do than watch a terrible series on Netflix about people that have tigers and guessing who killed who with what tiger. I don't know. It just seems like a waste.
So you have seen some of the show?
No, I've seen a lot of the internet discussions about the show, and I'm just staying away from it.
What about Ozark? That's another one that's popular these days.
No. See, so Tiger King, I like equate to like Swamp People or any of those other shows, quasi-reality shows that are just dumpster fires. I don't know anything about Ozark though. Is it a dumpster fire or is it worth watching?
Oh no, I don't know. That's why I'm asking. But it's like another one of those. So what are my shows? I really don't watch anything. I'm like so busy. Jesus Christ! I thought I'd have like all this free time, but trading during the day, making videos before and after, and dealing with a million things. Everyone wants me to speak at their online conferences, which like start tomorrow morning.
Sure.
Anyway, let's talk.
Well, speaking of trading, I mean, the last week and a half, I've seen some pretty incredible volatility and some pretty amazing opportunities in crypto. But one of the things that I want to talk to you about is why you think that Bitcoin latched on to the overall markets during the initial COVID panic, and people were selling like crazy into fiat. I thought you were very clear that Bitcoin was a storage of value and protection against these kinds of runs. And we've kind of jabbed each other a little bit friendly.
Yeah. No. Okay. Look, I actually pointed this out the other day. So Bitcoin is a store of value, but not against the loss of people's jobs. That's not exactly what it's a store of value for. Bitcoin is a store of value against the financial system not properly functioning. And by not properly functioning, I mean, and we're going to talk about this in as part of the law show, government freezing your accounts, government not giving you your money, government a lot of the financial stuff. Now, Bitcoin is still a private asset, no different than gold and no different than your speculation in the equity markets. So when the equity markets start to crash, it's this battle between public assets and private assets. Like, for example, a person working at a restaurant is now scared for their job. One of my friends who works for the court system, who is home on a paid vacation, is not worried about his job. So because it's going to come back, because the government will just, they're not going to fire their court employees. So it's this battle, private versus public. And when private assets crash, Bitcoin does crash along with it. Now, Bitcoin is correlated with the stock market, but at various degrees. So, for example, all the ups and downs, Bitcoin went all the way up in 2017, and the stock market had an incredible year in 2017. 2017 was one of the best years for the stock market.
Sure.
And it was one of the best years for Bitcoin. Now, they both topped around the same time. But the stock market correction As of January 2018, same with Bitcoin, the stock market correction lasted only a few months, and the Bitcoin correction lasted longer. Now, stock market went along and then made a brand new high, a nice high in June of 2019. And so did Bitcoin. Bitcoin went all the way to 14,000. They were once again correlated and rising. The difference is stock market made a new all-time high, Bitcoin made a lower high. Then they both fell again. Stock market made a brand new all-time high. And guess when? In February of this year, stock market made a new all-time high. Now, Bitcoin did well also. Bitcoin rallied from 6,000 all the way to like 10 or 11,000. And it topped around the same time as the market. But Bitcoin did not make a new all-time high. This time around, the stock market made like a 3-year low. Bitcoin kind of held and it did not make a new low. So they're correlated, but right now, I think Bitcoin will start to become a safe haven. The other comparison that I made on my show was that in 2008 financial crisis, gold crashed with the housing bubble approximately at the same time. Stock market fell huge all the way into March 2009. Gold only fell huge into October of 2008. Gold fell 33%. The stock market fell about the same, about 33, 40%. But then gold started to rise and it went up 50% from October into March when the stock market finally made the ultimate low, dropping 50%. So at first they fall together, but then after people, brush off the punch that they just took, they start to get a little more defensive. And this is why I think Bitcoin is not going to go down further. This is why I think even if the stock market does start to go down from here, at this point, people will see Bitcoin as a bit of a safe haven and also gold.
Well, what's interesting is in the last couple of weeks with everybody sitting at home, I've had more conversations with my boating community about whether or not Bitcoin is a good investment or not. And the only thing I can tell them is, look, if you look at it as an 18-month play, it's hard to see where a speculative component of your investment package would not benefit from a long-term play. But if you don't understand the markets and you're just some new guy getting in trying to day trade Bitcoin, it's really not. You're really not going to understand the nuances.
Oh yeah, no, I'm with you. I'm getting.
But the over 50 traditional investment crowd is asking me more and more about whether it's a good time for Bitcoin. I thought it was a great time for Bitcoin at 5,000, and that was just a couple of weeks ago, and we're at what, 73 now. So this is great.
Yeah, no, I agree. Like I am also getting people hitting me up and interested in this time around. Not only are those people seem to be serious, unlike in prior years, I am also thinking that this 2-year bear market has come to an end. So now I am more willing to help my friends and family to get into Bitcoin, which I wasn't exactly eager to do the prior 2 years because I was a bear in the market. And I didn't want to get them involved in Bitcoin and then watch them be pissed at me because I think it was going to go lower. But now I think it's going to go higher. So now I am more interested in helping them out as well.
Well, I think it's definitely panic suppressed. Yeah. That's the market all the way around is panic suppressed. And, you've got people talking about, the next depression. And the thing that I was, the conversations with my traditional folks is that they were recognizing value in the market and that cash is king in a suppressed market. And if you have liquid assets, go ahead.
Jason, can you maybe be 4 feet away and not 6 because you're coming in a little low?
Sure. Let me see if I can turn my microphone up here a little bit. How about that? Is that better?
Should be better.
Okay. So anyway, what my guys are looking at is just the traditional market play of, you know, when you have cash in the marketplace and you can afford to buy things at a suppressed price, knowing that later on they're going to have a higher value. That's where people traditionally, through depressions and recessions, have set their strategies, is to have more money at the back end of an event versus the front. The people that have to go out and sell all their assets in order to, you know, survive are the ones that are going to have fewer assets. Not only do they have to sell them at a depressed market price, but they have to sell them to survive. And so folks prior to this timeline that have had good monetary policy for themselves, you know, a good savings or a good emergency plan to be able to last 6 months or a year of, you know, trials and tribulations are, you know, those folks that planned are going to be much better. So anyway, why don't we talk about law? Let's talk about the most successful business in Bitcoin history, and that's Marco Santori.
Yeah, that's a good way to start off. And I mean, our David Silver, unfortunately, is not on the stream at the moment because David Silver is in a lawsuit against Kraken. Now, Kraken's been buying up companies left and right. So many people that, like, I was friends with for years and years and years, they all work at Kraken. It's like, it's incredible. Like, I can like name names, like 20 people that now work at Kraken that I knew from 2014, 2015. Everyone ends up in Kraken. They're like just taking over and they're doing well. And it looks like they hired Marco Santori. For those that may not remember, Marco Santori is the architect of SAFT, the Simple Agreement for Future Tokens, which many ICOs used to launch their product. He did this while I think he was at Pillsbury. And his latest job was at blockchain.info. I still can't call it anything else than that. And now he is part of the Kraken legal team. You've had your run-ins with Marco. Tell us a little bit about.
Oh no, all personal, nothing professional. Marco and I are, I would say, I wouldn't say we were friends, but I would say that we know each other and we have a shared mutual respect and affinity for each other. Other than the times that I used to sit in my pajamas and make fun of his SAFT agreements online whilst eating popcorn back in the day. But no, Marco is a very talented attorney. He knows how to recognize needs within the space and try to come up with solutions that fit those needs. Yes, sorry, my dog is wanting to participate. What? Yeah, okay. So the thing about Marco is that sometimes he will do things in the legal world where he thinks they should go or where he wants them to go or where his clients want them to go. And that I think is where the SAFT agreement got him in a little bit of trouble, was that a good number of the people that the SAFT agreement was used for was basically used to launch a ton of alt currencies that may or may not have been proper offerings, right? Instead, it turned out to be illegal offerings of securities. So hopefully at Kraken, he'll have learned those lessons and can apply them effectively to do what he can do for Kraken. Yeah.
All right, so let's move on to our first story. We're actually gonna, I was gonna wait and see if Mr. Pally would join us on this because he happened to write this article for the block. But maybe we can get your quick thoughts on this. We're not gonna do a deep dive on it, but a slew of, because you're not a class action.
I'm not a class action guy, yeah.
We have other people for that on the show between David Silver and Restus and I'm not sure if Pally is into the class actions, but he wrote the article.
He did write the article.
Many class actions were filed by the same company that had their lawsuit against Craig Wright.
Yeah.
And
the Kleinman case, guys, right?
Yeah.
And just for posterity, folks out there don't know, I actually turned down the Kleinman case when it showed up at my door, because I just didn't see any possibility of being able to collect from Craig Wright, and it seems to be the same place that they find themselves in now.
Yeah, can we talk about that? Like,
the Kleinman case?
obviously, well, not necessarily the client. Well, yeah, I would love to talk about the Kleinman case. Maybe you can, because no one else seems to, because they're all like too close to the case. I find the Kleinman case so interesting because David Kleinman is an interesting person that seems to have ties to the early days of Bitcoin that no one really knows because he passed away before people knew.
Right. And, well, the case was brought forward and presented on behalf of the estate by his brother, who really didn't make the best of plaintiffs, right? Not a good person to put on the stand. So it was very challenging to look at the case in light of his brother, and then have that.
How do I get rid of this?
I don't know, the Daily Crypto Brief. Get rid of what?
The pop-up that's now there.
Oh, yeah. Escape, maybe. There you go. So anyway, the thing about the Kleinman case and collectability, which, you know, with any case, with any lawsuit, I think one of the things that folks forget is collectability is always an issue. So you can file, you can win, but can you collect?
But wait a minute. Well, okay, hold on a second. But like, I understand why David Silver can't collect on, you know, the 10,000 Bitcoin that he thinks he deserves from the
that the judge ordered, or his.
Right, that the judge ordered. That, oh, is David Silver going to join?
No, I think he
can't. Damn it, because we're on a Friday. All right, we can't do the show on. Oh no, we're not on a Friday. Okay, never mind. He can't join us. I was gonna say, I understand why David Silver can't collect on the Cryptsy money because
he doesn't have the private keys, right?
Yeah, because the private keys are missing. But in this case, Craig Wright is not. No, not the private keys are missing. Big Vern is missing. But in this case,
Big Vern's in China. We know where he is. He just can't collect.
Well,
right?
You don't know where he is. You don't know where he is, right? You suspect he's in China. It's not like you can go and knock on his door.
Well, sure.
Nobody knows. Nobody knows.
Back up again.
Yeah, I know. No, nobody knows where he actually is. But there has to be like a button here. I think it's just like I just can't see it.
I don't know. I look for it too. Yeah.
It's just
so
like,
I'm trying to follow along on my own one as well.
Hey, there it is. Nope.
Did you find it? No.
Nope. Yeah, we're still.
There's a note. No thanks. Hit no thanks.
No, I didn't see that. Anyway.
So
if it comes up again, you'll show me where. Okay. Anyway, so the big difference is no one can physically find Big Vern, but you can physically find Mr. Wright. And if Mr. Wright shows back up in the U.S., I mean, is there an arrest warrant? Like, what happens?
No, of course not. Of course not. Look, this is a civil case, right? It's not.
So there's absolutely no enforcement to make him pay.
Well, going into post-judgment enforcement of a judgment can be up to a 7-year process of trying to extract assets out of people. I've done a little bit of it.
So this means if I get sued for like $1 million and I lose that case, I don't have to pay. I don't give a shit.
Well, there's certain things that lawyers can do to make sure they get paid. For example, David Silver was able to take Big Vern's wife's house that was purchased with Cryptsy assets. Okay, so that's in enforcing the judgment and collecting on the judgment. He was able to get the court to force sell the house and then use those proceeds to as part of the judgment. So it's not impossible to collect on Craig Wright, but it's difficult. It becomes a difficult process, which is usually why. Okay, so there should be a no thanks. So make your screen smaller and it'll be there. See no thanks? Right at the top
Oh,
of the phone. There
Jesus
you go.
Christ. Like
Yeah.
how do,
I know. Yeah. Hit no thanks.
oh yeah, I can't see it at all here,
I know
right?
they did a good job of hiding it.
Yeah.
So,
Right.
so anyway, back to the class action stuff's on point. Whether we call this Red Friday or whatever, yeah, there were a lot of lawsuits filed, against Binance, Civic, B Protocol, Status, Block One, KDEX, QuantStamp, Vbox, Tron, KuCoin, HDR Global.
Yep. And
I mean,
BitMEX is the interesting one. And before
yeah.
we dive into these, I just want to, I'm still processing all the information that you said. And it sounds like, as not my lawyer,
I'm not sure.
I was just advised to sell my condo and turn it into Bitcoin in case someone sues me and I owe them money.
Then you don't have use of your condo.
Hmm?
Then you don't have use of your condo anymore, right?
What do you mean?
Well, if you sell the condo, you don't have use of the condo.
Yeah, no, I can rent.
Okay.
Right, but if I own the condo, a lawyer like David Silver can take it away from me. But if I'm just renting, then no one can take that away from me.
Well, so what ended up happening, and we were going to do this later in the show, is that what would happen is that sale would be called a fraudulent conveyance or an attempt to avoid creditors or known creditors, and not for a legitimate purpose. And then what you could get is an in rem action against.
Oh, no. You have to sell it
addresses
before you.
themselves.
Oh, well, so this is why you sell it now before you get sued.
Certainly, yes.
All right, let's get back to this.
But what ends up happening, or what will end up happening, is if there's any ability for the Kleiman lawyers or anybody that's dealing with a cryptocurrency case, just like David Silver was, he was able to get an order stating that specific addresses belong to him. And then once you have that court order, then you basically have to monitor those addresses. And if there's any movement of those assets in violation of the order, well, then you can go back to the court and you can say, hey, judge, there was an order. This guy was supposed to hand him over to me, didn't hand him over to me. He's violated the order. He's in contempt of the order. And now we need contempt brought against him in the form of cash payment, or at the court's discretion, jail time. So it's only in a contempt portion of a civil lawsuit can the judge actually order jail time. So it is possible for somebody in a civil lawsuit, person against person, to go to jail as a part of that case, but it usually comes in the form of that contempt. So anyway.
Got it. All right, so let's get back to this. Can we just let's throw the obvious on here. Why is BitMEX on this list? They don't have a scam coin. As much as Tone Vays has an issue with BitMEX, I haven't seen anything like they're not a scam. They're not like Binance. They don't have a scammy security token pretending to be a utility that was an ICO. Like, why is BitMEX in here?
Well, I can't really speak to that. I haven't read the complaint, but it seems on page 3 of the complaint, it's part of a market manipulation claim that Arthur Hayes and BitMEX were attempting to manipulate the market or markets through BitMEX. So if you scroll down, Tone, and you get down to the point to where script D is in there, keep going down, scroll.
Yeah, right there.
Keep going.
Right?
All the way down. Embedded versions, keep going.
Oh, here. Okay, got it.
Yeah, and then go to page 3. It talks about Arthur Hayes and BitMEX. Actually, it's
market manipulation.
Right.
But these are all independent companies. How do they just group everything into one case?
Because they're all related somehow, or the facts are so interrelated that this is called joinder. That joining all of these issues under one case would be more efficient for the court to handle as opposed to handling them as individual cases. Now, it may be that the facts are so unrelated that the defendants would argue, we want our own separate case here. We want to be removed, and that would be a defense tactic. It would be to have your own separate deal and argue that BitMEX has nothing to do with KDEX and why are we here together and argue for that. And then the plaintiff would have to argue why it's more efficient or why the facts are so similarly or intertwined related that having one lawsuit handle all of them would be in the interests of judicial efficiency. So that's why it would all be filed together, as if there's some intertwining facts to where you don't have to have the same facts and the same witnesses appear at 14 different trials. So you call them all together.
I'm not a lawyer, but like this is a freaking stretch and a half. Like, look, I hate almost every single company that's listed here. Personally, if anything, BitMEX deserves its own standalone because it has nothing to do with the rest. It's not like the others. It doesn't have a shitcoin. And then I personally wouldn't group something like Civic and Winnie Lingham with Binance and CZ. Yes, they are both, they both have ICO coins, but like one is an exchange that has, and the other is nothing like that. And same thing with Dan Larimer and Block One and EOS. They're more like a platform. Like it's not like the others. I mean, you can kind of, I think KuCoin is an exchange, and
well, I mean, some of the claims against Kraken have to do with alleged failures. And
well, Kraken is not on this list.
Hold on, let me finish. People being unable to trade during times, and as a result, they lost money, right? And so there's some of those same claims here with BitMEX. I don't know. I haven't read through the 85-page complaint here.
Yeah, no, I mean, we'll move on. I think Pally has. That's why I really wanted him on. I'm sure he read through the whole thing. But yeah, this is kind of interesting. Personally, I would rather like have you guys dissect these things on their merits one by one and not group together as a single lawsuit. Now, the other question is, who are they suing on behalf of? Like, did they pool like thousands of people? That
no,
like
if you scroll back down to the complaint, I think there's 4 plaintiffs that are listed there.
4, but all 4 of them were involved across all of those companies, or is it like this weird 4-sided Venn diagram?
No.
This guy was in 2 of them, and this guy was in this one, and that one.
That's not what a class action is about. Okay, a class action is you find 1 or 2 plaintiffs, and they represent the entire class. Class action is a strategy of making a lot of money with very few plaintiffs, and it's said to, the power of class action is said to have big weight against defendants that do things wrong, and so it's supposed to be a deterrent to keep defendants from doing wrong things. But honestly, the real money in class actions goes to the lawyers who are fighting the cases and see the huge rewards of bringing this case. I don't know how much Chase Williams, the plaintiff, actually lost. If Chase lost $5,000, okay, well, Chase, great. You are never going to get a lawyer that brings a case for $5,000 on your behalf, but you might get a lawyer who's a class action lawyer that agrees to bring a case on behalf of you using your facts and a class of similarly situated people if there are facts that suggest that this is a repeated action across multiple folks.
It almost makes me regret of not owning any of those shit coins at any point in time. Otherwise, I would like join in this case just so I can know just so I can be updated on the details.
Well, okay. Yeah, good luck with that. Yeah.
All right.
So to talk about the good and the bad of class actions, just like anything, there's good things about them and there's bad things about them, and I think this case shows a little bit of both.
All right. So before we get into the merits of a single token being a security or not a security, and we do have a question. I see your question, Brandon King, and we're going to get to this question, but we're going to get to this question in the form of Ripple, not in the form of BNB. I'll read the question, but we have one more story before we get to the question. But if you're still watching, stick around. We will get to it. So the question was this: if BNB is classified as a security, do you think that there is any chance of prosecution? Question mark. If so, who would prosecute? So we'll get to that, but we'll phrase it in the form of Ripple.
What's the question? So there's a token somebody's curious about.
I mean, the question is, what would happen if one of these current tokens, like BNB or Ripple, gets classified as a security? What is the outcome? And we'll get to that. But let's just briefly comment on this. Story broke yesterday. U.S. state regulators from your state of Texas, Jason.
It's not a state; it's a country, actually.
Not yet.
It's the greatest country in the United States.
You know, contrary to popular belief, only like 5% of your state actually wants it to be its own country.
Well, let's move on.
What's up?
I said, let's move on.
U.S. state, though I have to say, to be honest, I think Texas is more America. I can name you 5 states that should be their own country, because when you go to those states, they're like in their own world. One of them is Florida.
Yeah.
Come on. You have to admit Florida has a bigger right to be its own country than Texas.
Well, you do know that the Florida Keys seceded and formed the Conch Republic way back. You do know that happened, right?
I did not.
Yeah. So if you've ever gone to the Keys and you see advertisements or flags for the Conch Republic, it's because they actually formed their own country for a brief time. They were pissed that there were border checkpoints just up from Key Largo, so that when you lived in the Keys, you actually had to go through a border checkpoint to get into, Homestead and Lower Miami. And they're like, wait a minute, this is all the United States. Why do we have to go through a border checkpoint to get into our own country? God damn it! And so, as a protest to that, they said, screw it. Actually filed secession papers in the federal court in Miami, declared that they were their own country, right? And then, like within the same day or within the same week, agreed to surrender on the terms to, no, I think at some point in time, they asked for aid from the United States. As a foreign country, they asked for aid.
Nice.
and then rejoined the United States. So, I mean, it's pretty great. So you could go down to Key West and you can actually get your own Conch Republic passport now. It's a little bit of a joke, but it was pretty funny. So anyway, Florida did secede.
Yeah, we have people in the live chat that think Colorado should be its own country. Maybe if you were the only state with legalized marijuana, you would have that claim, but that is no longer true. So now all the potheads can now spread around the country. So my list is this: California should be its own socialist republic.
Well, hold on. So for a very long time, at least 2 decades, there's been a movement from Northern California, so north of San Francisco, to just south of Eugene, Oregon, which is where the University of Oregon is. That landscape there, all the way over to Idaho and Nevada, have wanted to form their own state called the state of Jefferson, because you get north of Eugene and south of San Francisco, or south into San Francisco in that area, the population is so different and the geography is so different, and the purposes and intent of the rural landscape is so different, that the legislature in both Oregon and in California seems to treat that area as just some, bastard stepchild. So yeah, the state of Jefferson has been in contemplation for a long time.
And I have one more candidate. So for me, it's Florida should be its own country, California should be its own country, and Utah deserves to be its own country.
There's a strong argument for Utah.
If you've been to Utah, you will know why. Like even the beer in this country has a lower alcohol content for the state of Utah?
Well, when's the last time you were in Utah?
It's been a while.
So did you have to get a membership to a club in order to have a beer?
Yeah.
Did you get the membership?
No, I was actually, I think I was underage, but last time I was in Utah. But
so
like,
last time I was in Utah, I wanted to go watch a basketball game. I wanted to watch Blazers Lakers. And so there was a sports bar and it was in the basement and, real hush hush. And I don't know if you know this or not, but the streets in Salt Lake are super wide. So just to cross the street is like 100 yards. It's ridiculous. So anyway, I got into the sports bar and I went inside and immediately at the front desk, somebody asked me if I had a membership to go into this club. I said, what are you talking about? I said, well, you can't drink here unless you have a membership. And it's called liquor by the wink. Okay. So this goes back to the days of Prohibition where you could have your own special or private social club. And it was believed that the bottle that was in the bar was actually yours. So you would bring your own bottle in and then they would serve you out of your own bottle, right? But what happens is these clubs would just stock a bunch of bottles and assign the bottle to a person and go wink, wink, and it's liquor by the wink. So anyway, Utah is one of the only states that still does liquor by the wink. I don't know if it does.
Yeah, no, I don't know if it does either. I'm sure, but like I'm just saying, like I've spent my time in a lot of U.S. states, and I know people think that Colorado should be its own country and Texas. Yeah. Look, to be honest, Texas, Oklahoma, New Mexico, they're not that different. But when you're in Utah, you're in Utah. When you're in Florida, you're in Florida.
Yeah. I'll go with that. Yeah. Okay, the state's shutting down crypto mining.
All right. All right, let's go back to mining. All right, here we go. So they're shutting down probably a fraudulent operation. And because, man, like crypto is really taking scamming to a whole new level. So this was, another cloud mining operation. The company is promising eye-opening returns. According to the order, they are telling potential investors that a $10,000 investment in computing power will return nearly $10,500 per year. A $50,000 investment will return nearly $52,000 per year. Yeah, we can do the math. Jeez. Press release said. So basically, they're shutting this down just based on a promise. I mean, that is a pretty hefty promise. Obviously.
Oh, I don't know. I mean, let's think about it. That's over 1 year, right? So I don't know what the statistics are today on hash power, but what does it cost to get a reasonable Bitcoin miner today? Or what kind of hash power could you get for $10,000? Right?
Well, no, but it's not like for $10,000, right? They're pooling money. So
no, I don't disagree. But if I was to sit here and parse this out, what can I get? What kind of hash power can I get for 10 grand? Right? And over a year, would that hash power get me 1 Bitcoin?
For 10 grand over a year,
probably right, just a machine, right? Just a machine.
Well, the machine will run you maybe $2,000 and right. Plus electricity cost.
Sure. So the point is, if I was to make an argument that maybe some of their claims are accurate, right? I would, and I don't know because I haven't done mining stuff in a while. The last time I had a Bitcoin miner, it was a 21 Buttbox, and it's in the other room, by the way. And if anybody wants to see my Buttbox, I will happily show you my Buttbox.
Oh, yeah. Is that the 21?
Yeah, I've got a 21 Buttbox. Hold on, I'll be right back. I'll get it. I'm gonna stop my video. I'll be right back.
All right. So while Jason is getting that, we can take a look at the price of Bitcoin. Hey, why not? I have to change screen share there for a second. Let me and see what's going on. I'm gonna do a little price action in the middle of a law show. I'm gonna be running low on time here. We have to make it quick. Here is the daily chart. Now, the stock market had one hell of a rally, contrary to my expectations. The stock market had one hell of a rally. But here's the thing. Bitcoin, once again, got absolutely perfectly rejected by the 20-period moving average. And we are on a daily 9. So the high from yesterday has not yet been broken. And the same kind of applies, almost applies, to the S&P 500. I'm going to do this real quick because Jason is back. So looking at the S&P 500, while yesterday was a disastrous shooting star candle, today was a beautiful, huge upswing. And while my personal portfolio was leaning to the short side of the market, it certainly took a nasty hit, but I did not deleverage my portfolio because I still see this area as a potential top. I would need to see a close higher than 2,800 for me to admit that this thing is not going to go down and we're going to go into the rally. Tomorrow is Thursday, going into the long holiday weekend, a 3-day weekend. Stock market is not going to be open on Friday. And therefore, I am still willing to risk the fact that I am still anticipating this to hold, this area to hold. I thought this would be the high. Today, we broke that high by about a penny, and that's not enough in my book to consider the high to be officially broken. I would need a close above this Fibonacci line tomorrow in order for me to be scared of my short positions going into the weekend. And if tomorrow is a down day, I may hold those short positions through the weekend because I still think that we have gone up way too far and way too fast. Okay, so on that note, we're going to go stop the screen share and take a look at the Buttbox.
So, this is old school crypto mining history here. Not only was it a little Raspberry Pi based miner.
Let's hold off on the word history for a second. This thing is like 2 years old.
No, this is at least 5 years old.
Oh, wow.
And I actually bought this from Mike in Space, by the way.
Oh, did you really?
Yeah.
Not Joseph or?
No, I got this from Mike in Space. And the reason I bought it is that
who, by the way, is either Bcash or BSV. I forget. But he's not in Bitcoin anymore.
I don't know. I can't speak to it. But at the time, he had his little 21 Buttbox sitting up in Canada, and he had it.
Box, right? He bought like all of them. Like he bought like 50, you know?
I don't know how many he bought, but he had set up one of them to generate random tweets. So he had his computer generating random tweets on Twitter. And so I said, you know what, that would be hilarious if I had mine doing the same thing. So we used to troll each other with random generated tweets with random variable words that were in there. And we'd on occasion troll other people. Like I think I used to troll Roger Ver with it, or the Buttbox would, because it would create a randomly generated sentence.
Can you just like we have a large audience here that has not been in this space for 6 years like you and I have. And can you explain the history of the name Buttbox?
Oh, okay. So Butterfly Labs, all right. It was the creator of the miner, and it was a little box. So the Butterfly Labs Buttbox, it's a Butterfly Labs box, so Buttbox.
Wait, that's not what that's not what I no. That's not how I remember.
Oh, how do you remember?
The Buttbox was 21.co, Balaji's company, that was going to create a tiny miner that would, just be your node and miner at the same time, kind of like what Casa's doing now. And this thing was going to just mine Bitcoin for you. And I don't think it had anything to do with Butterfly Labs.
Well, so maybe this is where I'm confused. Obviously, it was 21.com, but I thought that the miner itself was based off of Butterfly Labs.
Well, no.
So maybe I'm confused.
No, it's a Raspberry Pi running mining software.
Yeah.
Right, but it has nothing to do with Butterfly Labs. Was
so where did the Buttbox come from?
Oh, Chris DeRose and Joseph on their podcast, Bitcoin Uncensored, referred to it as the Buttbox based on how stupid it was.
Is that right?
Yeah.
I always thought there was a tie-in with Butterfly Labs. Look how stupid I am.
No. This thing came around like years after Butterfly Labs imploded. So this is from like 2015. And Balaji started the company 21. And their first product was going to be this at-home, $200 miner.
Yeah. And it never mined shit. It
could mine. Like how the hell is a Raspberry Pi with mining software on it going to compete against?
No, see, the way that it was supposed to do is supposed to be a pool, right? And you could only run 21 software that was put on it, and you could only run 21 applications that run. And so they were going to sell all these little miners out there and then cloud them. And that's how it was all going to happen. So this gets back to, what I was trying to say is that you could run a little Buttbox, which would be stupid. Or what does $10,000 get you as far as hash power? And if that hash power could get you over 364 days of mining, could get you 1 Bitcoin total, then there's an argument that could be made that $10,000 initial investment could get you $10,000 a year if your hash power supported that. Or if it's 50,000, that, if you're going to get 5 Bitcoin out of that, then it's possible it could do that. So, what we don't know is what we don't know. We don't know what investigations the Texas State Securities Board or Alabama Securities Commission brought forward. We don't know if ultramining actually had any computer power.
Here's the legal question, right? Let's turn this back into a legal discussion. Yes, the Buttbox was originally $400, and it was literally a Raspberry Pi with 21 software on it on their own network and running mining software that was going to pull together and somehow compete in this world. So that's what made
that's
it.
That's how crazy it was. Yeah. So if you scroll up a little bit. According to the order, click on the order there.
Yeah. So, okay, I do want to ask like a serious legal question. But if you want to glance through this first, go for it. I can get another drink. I can't only get a drink.
No, ask the question.
Okay. So the question is this, right? Like, here's what we don't know. Here's what I don't know because I didn't read the whole order. Was this a legitimate company with a stupid claim or ill-advised claim? Like, here's an example, right? Like, there are scammy cloud mining companies, which is somebody crowdfunds 18 million in this case, crowdfunds 18 million for cloud mining. We're going to mine Bitcoin, but he doesn't actually do it, right? Like, that's straight up fraud. I mean, that's not debatable, right? You collect 18 million to do cloud mining. You don't actually do any cloud mining. Maybe you buy 3 miners for you spend.
No, they're not actually buying any. So if you read the findings of fact here, it says that they claim to be a cryptocurrency cloud mining company that hosts third-party mining farms around the world.
Right. Okay, fine. They're not buying equipment, but okay. So here's what I'm getting at, right? So there are multiple types of issues with cloud mining, right? So the most obvious form of cloud mining fraud is in this case, they collected 18 million. So let's just use this number just for sake of argument, right? So some guy goes and crowdfunds $18 million from the, dumb retail investors into cloud mining. And he barely does anything. Like, he keeps 15 million for himself and, goes buys a yacht. And then he spends $3,000 on actual mining, whether that's himself buying the equipment and hosting it or investing $3 million into cloud mining, but keeping the majority of the money for himself and not actually using it for what he said he was going to do. That is very obvious fraud that the legal system has all elements of going after. Now, let's talk about the other one, right? Let's say this guy, whoever started this company, is actually dumb enough to think that he can be profitable in this venture, and he crowd raised $18 million for cloud mining, whether it's his own equipment that he will buy, or he would use this money to, as a third party, invest in other hosters without owning the equipment. It doesn't matter. And he actually invested all of this money into cloud mining for the people.
You keep saying he. The person here is a female, actually, Laura Branch.
Oh, okay, sure. She. Let's be politically correct. He or she.
Unless her chosen pronoun is he, and then you're right on. I don't know anymore. I'm too confused to know.
We'll go with she.
But the person's from Las Vegas, so who knows? Tone, you were just there. You're not sure.
Right. So the person actually invested the entire 18 million into some form of mining, whether through third parties or directly through themselves, to attempt to make his investors money. In which case, is there fraud there, or are they really going after the wording in the advertisement? Like, for example, is the crime?
No, so what the states are more pissed off about? No, what the states are more pissed off of it is that when they did the inquiry, and you can see this if you read the order, starting on paragraph 31, page 4. So fraud and the failure to disclose information relating to principals and managers. So look, what ultra mining or Laura could be doing here, they absolutely could be doing stuff, but instead they've gone with the double bird defense to answering any questions. So Branch is refusing to answer any questions about any of the principals or managers of ultra mining. They're refusing to disclose the location of any of these assets. They're, basically it's just been a failure to respond or refusal to respond when it comes to any of the information. So normally if a state securities regulator comes after you and they say, great, you're legitimate, but we've got some questions, prove to us that you're legitimate. And if the response to that is two birds and telling the government to go screw itself, you're going to end up getting this kind of a response, which is, well, first of all, screw you too, pal. Here's your cease and desist order. You could have explained to us that this was legitimate, etc. Because honestly, I don't think the claim that you could get $10,000 a year out of a mining operation for a $10,000 purchase is out of the question. I don't think it's out of the question when it comes to the profitability of hash power. There's a reason Bitcoin miners have been mining Bitcoin since day one, right? There's a profitability component. And that's why I didn't know how much hash power you could get.
Can I challenge you on this?
Yeah.
I guarantee you there are people right now that are mining for 100% a year profit.
Sure. And that's what this was offering, right?
Right. Now, there are people that are doing this, right? Now there's a big difference between somebody being able to find an advantage and mine, and obviously this person can't do it. Like, I know that's like, I am as certain of that as anything, right? It's kind of like, well, I personally know people that make 100% a year return in trading because they're very good traders.
Yeah.
But some guy that learned trading last year claiming that he can get you 100% return is laughable, right?
Well, I don't disagree. I don't disagree at all. But the mistake that Ms. Branch has made here is when they asked questions of how are you doing this, right? It was a double bird response, right? Double bird response.
Got it.
Right?
Got it.
For all of you people out there that don't understand the reference.
So basically, the government was willing to listen and have this person explain how she is going to provide 100% annual returns, and the answer they got was "fuck you."
Yeah, twice. Yeah, and so that's how you get a cease and desist order against you. Now, let's have no doubt about it. Cloud mining operation is just like Howie in the Hills. Okay. So I'm gonna do the quick primer on Howie. Howie in the Hills is the investment contract case that has settled 80 years of
I gotta have that link
law.
on hand.
Right, and the fact pattern behind Howie in the Hills is an orange orchard decided to sell individual rows of orange trees. Okay, so the correlation here is you have a mining machine with hash power. They allegedly own it all, but instead of them using it for themselves, they are selling individual rows of hash power. Okay, so if the rows of trees in Howie are what's for sale in Howie in the Hills in SEC v. Howie, then hash power is the equivalent of a row of trees to a mining cloud mining company. So they maintain the computer, they maintain the software, they run the facilities, they set up all the agreements, they blah, 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 blah. It's exactly what the Howie in the Hills management company was doing, because even though you could buy your individual trees, you didn't maintain them. You had Howie in the Hills management company maintain them. So cloud mining and cloud mining operations almost 100% line up with a securities analysis for investment contracts. So if you're out there selling cloud mining shares or cloud mining time, there's a high probability that you're selling a security. So if you look at the order, they've already said right from the beginning, it's failure to register. So that'll come with every one of these state actions is failure to register. And that helps them gain jurisdiction by claiming that you should have registered. So now we have jurisdiction over you because you didn't. So they're going to have to prove that it's not an investment contract in order to get outside of Texas's and Alabama's jurisdiction for that, which they're not going to be able to do. And then from there, then the fraud comes into it. So there's failure to disclose, failure to respond, failure to prove any of this. So it must be a ridiculous story. So.
Okay, so wait, this link is in the video description, and we were going to talk about this. This is the framework for investment contracts for digital assets. So this was something the SEC released fairly recently, just a few months ago, and it explains the Howie in the Howie test. And someone in a live chat asked, "Is that why there is a town in Florida named Howie in the Hills?"
Actually, Howie in the Hills is the town where that orchard was based.
Yes. That's why it's
every time I drive the turnpike, I tip my hat and raise a glass to Howie in the Hills.
Yeah, because it's earned you a lot of money over the years. Hey, so we got an interesting comment here in the chat, and I really want to I want to kind of address that. Why don't you help people like KuCoin, Gemini, Binance, who donate Bitcoin to Italy's borderless doctors? So I don't like Gemini being put in the same zip code or in the same universe as Binance. Gemini did not have what I consider an unlicensed, unregistered security or a scammy ICO. So they're not the same. I
think of any of the actors in the cryptocurrency space since 2013 when I first started in this. The Winklevoss brothers have endeavored to do everything by the book,
right?
And in full disclosure and in full openness without doing anything scammy. I may not have agreed with all of their politics, but I appreciated at least that they were attempting to do everything by the book and set the example that it could be done by the book, as opposed to other people that wanted to cut corners.
Right. No, I have huge respect for Gemini and the Winklevoss twins for.
I'm gonna turn off my camera here, but I'm gonna listen to you. I'm just gonna go refresh my.
All right, that's fine. Right, so I've been critical of the Winklevoss twins for they're not for claiming that they hold like 1 or 10% of all the Bitcoin. I feel like they haven't really done all that much for Bitcoin adoption. Other than create an exchange, but they did create an honest exchange. They never ICO'd, they never printed their own money. So I don't like to put Gemini in the same box as Binance. Now, I do not have any respect for Binance. I don't care how much money they donate, because I think Binance broke the law and they cut corners, like Jason mentioned. He didn't say specific to Binance, but he said cut corners. And I don't respect Binance. So whatever money Binance makes, I don't care what they do with it. Like I don't respect a criminal for donating the money that he earned. Like if some guy robs my house, which Binance didn't do, but I'm just saying, if someone steals from me and then donates that money to doctors, I'm sorry, I'm not going to give that person respect. So if I feel that someone has done something illegal or criminal, or got a competitive advantage in the marketplace.
Well, for a very long time, donations have been a part of any good fraudster's repertoire, and and if we go back to the Texas case for a second, for the lady in Las Vegas, one of the things that they put in their order, it is part of the representations where they had an affiliate program. So if you were out there selling the hash power, then you were earning money for selling. So this kind of starts feeling like a multi-level marketing scheme.
Right.
But two, they were also making representations that they had made donations of up to $100,000 to UNICEF for COVID-19 relief, and that they were going to continue to do donations. Now, when you're in a panic time, like we are now in a global pandemic or any state of emergency, there's this concept called disaster capitalism, where people try to take advantage of people's generosity through affinity fraud. And affinity fraud it comes in multiple forms, but in this case, saying, hey, you're going to give me, this money, you're going to buy this processing power, and at the same time, I'm going to, donate a bunch of money to something that you feel strongly about, in order to have you feel better about separating money to me that you normally wouldn't have. And in influence terms, under the book Influenced by Robert Cialdini, this would be reciprocity, right? The concept that, if you give me money, I'm going to donate it to the charity that you really want it to go to. So it induces you to do something that you normally wouldn't do by the guarantee of a payment to COVID-19 relief. And the state, both Alabama and Texas, both pointed out that they could provide no proof that any donation was actually ever made. So with this Texas scheme, with this ultra coin, or whatever it is, Miss Branch's coin, it appears that she was hitting a lot of hot button scam issues to try to separate people from their cash. Now, I hope it's all true. I hope that those donations were happening. I hope that all those things were there, because I don't wish bad on anybody. But I think one of the reasons for the cease and desist order happening so quickly from the time the discovery of this activity going on was the affinity fraud and the disaster capitalism that was being employed simultaneously with this offering. And so, yeah, good for Texas and good for Alabama for trying to shut it down.
Yeah. All right. So let's move on to another part. And this is where we're going to talk about what happens if one of these things, like the Binance token or the Ripple token, what happens if they get classified as a security? So the Ripple case, I really wish the plaintiffs in the case were a little stronger, but that's okay. So Ripple is trying to dismiss this court case that we have a plaintiff that is being represented by, from what I hear, is a pretty reputable law firm, and they are trying to claim that Ripple is a security. And I personally have always believed that Ripple is a security. To me, the Ripple Corporation, and we can go back to the Howey test, right? So let's just jump back to the Howey test, right? And here we go. An investment of money. Well, people certainly bought into the Ripple token from day one. The Jeb McCaleb and Larson and the other, and I don't know if Garlinghouse was already there, probably was. But anyway, they created the Ripple token. They created all the tokens, 100 billion Ripple tokens. They still hold the majority of them, probably about 60%. The other tokens, they were not mined into existence. They were not handed out, though handing out tokens could also classify as a security.
Airdrops can. We've talked about that in the past.
Yes.
Yeah.
But certainly there was an investment of money, because from day one, you had to pay something to earn that token. The common enterprise, to me, is the Ripple Corporation, which can claim that the Ripple token has nothing to do with the Ripple Corporation and how it's decentralized, but I believe that that is total bullshit. So there is to me, there is a common enterprise, the Ripple Corporation, that is working, making these tokens more valuable.
Hey, Tone,
yeah.
Give me 1 second. I've been using the camera microphone for my audio. I'm gonna switch to my headset. There's still some folks that are complaining. Hopefully this will improve.
Okay, well, we'll see if there's complaining.
So I just switched that over. All right.
Oh yeah, no, I think it's better now. Yeah.
Okay.
So to me, there was clearly an investment of money into a common enterprise, the Ripple Corporation. A reasonable expectation of profit derived from the efforts of others. While the Ripple Corporation is implementing the Ripple token into their products. And
so let me stop you there for a second.
Yes.
Right. So this, unfortunately, the SEC is not revealing the multiple cases over the last 80 years that have shaped what all of these things mean. Reasonable expectation of profits derived from the efforts of others. So go ahead and go back up there. Originally, the Howey test said solely from the efforts of others. And so you had a lot of people that offered securities, and so long as the purchaser did a small thing or a ministerial thing, they could say, oh, well, they had a part in their own success, right? So what are the efforts of the others, and what do those mean, and why are they important? The efforts of others are not just ministerial efforts, they're the real consequential efforts that matter whether or not the venture will succeed or fail. Okay, so the janitor working at Ripple's server farm you're not relying on the janitor, right? You're relying on the control people that have, or what they call an associated person. So if we look at the reliance on the efforts of others, an AP and your mouse is right on it, just to the right, and an associated person, an AP is responsible.
Right,
for
the active
participant, yeah. So like when we talked about Steven Seagal.
Your mic is like crackling.
I'm sorry, is that better now?
Sort of.
Okay, I'm gonna switch back to the other microphone. I'm sorry, guys.
Yeah, you've had good microphones. You've shown them to me what they look like when you go through security.
Yeah, well, unfortunately, I'm using I don't have that stuff with me here at this house.
I think you should go back to the camera and maybe.
Yeah, how about that?
Oh yeah, I think it's better. Maybe sit a little.
I'll sit a little closer.
So yeah, the active, like the detail of active participant. I remember this when we covered this story, and I was like making a joke. So this makes it sound like Charlie Lee is an active participant of Litecoin.
Well, he is. Right. So that's kind of the. Anyway, so in looking at the efforts of others, you have to look at the people that affect the end result at the end of the day of the company, right? So what's the name of the guy that went on TV and said everybody should invest in Ripple? Who was that guy?
I honestly don't know, but I would love to find that video. Was it a Ripple employee?
I think it was the head of Ripple.
Oh, that's bad. It's either Larson or Garlinghouse or
yeah, it was stupid. It was. I mean, so look. So in looking at a digital asset, and what I don't agree with what the SEC has been doing lately is where they used to say that they're going to take a look at crypto assets on an individual basis, that facts matter, there's now a strategy to just blanketly say that every digital asset out there is a security, except for Bitcoin and Ethereum, right? Because they're so decentralized to where it's, you couldn't be relying on someone, right?
And I would happily show up at their office and explain to them why the Ethereum is not decentralized.
And I could make the same argument for Bitcoin, right? I mean, there's a lot of centralization that's occurred over the last 5 years in the deployment of the Bitcoin network.
Anyway, I would argue with you on that.
Well, that's fine. That's what lawyers do. You're not a lawyer, but I'm the opposite of that echo chamber in whatever room I'm in, Tom. You know that. So anyway, the point here is with Ripple and with the SEC blanketly calling everything a digital asset, regardless of use. This is where we had talked before the show about tying in Forman. And United Housing v. Forman is one of the key cases in the development of securities law in the last 80 years that has stated specifically, we don't care if something is actually an investment contract, if somebody buys it for the purpose of using it, not as an investment, but for using it, there's no way it can be an investment contract because you have no expectation of a profit. So if somebody actually bought Ripple to function as a banking transfer component, not as an investment, then it's not a security to them.
Well, someone or majority or everyone?
Listen, you have to bifurcate, okay? You're going to have a group of people that bought for investment purposes, and you're going to have a group of people that bought for use. And they're two different groups.
I'm going to cut the camera there for a second. Let me, wait. Can you hold up those two pieces of paper?
Yeah.
Now, can you rip off, what is the smallest little piece you can rip off from that piece of paper?
Oh, hold on. There's the people that bought it for investment, and there's the people that bought it for use.
Okay? Right, but they're the same size, right? So what I want you to do is, I want you to.
It's not a size thing. Let me differentiate. Okay, so the people that bought for investment and the people that bought for use. And I'm gonna get to my point. Let me get to my point, okay? The point is, what the SEC and what other people are doing is that they don't want to do findings of fact on the people that are actually doing it for use. So what they're alleging in their complaints and their actions is, there was 1 billion sold, it's a billion of unlicensed, unregistered securities, period. Instead of saying, wait, there was 1 billion sold, 200 million of it was for actual use. So that's 800 million that's securities violations and 200 million that's not. But the lawyers in the space don't want to do that work. They just want to say, well, it's all a security, and they don't want to do the Forman analysis. Does that make sense?
It does make sense. Now, in this case, I think the ratio is very skewed. I think maybe 0.1% was
by way of analogy, Tone, right?
I know. Okay.
But here's what I want to avoid, okay? And I want to avoid bad law. I've always wanted to avoid bad law. If the law says in the Ripple case that more likely than not, they were all securities, but it doesn't go into any kind of discovery that differentiates between what was sold as a security and what was sold as utility, then you no longer have that entry-level analysis that makes you show from the beginning. One, you have to have jurisdiction. So the SEC doesn't actually have jurisdiction, nor do the security statutes give you jurisdiction to bring an action against something that wasn't a security, but they're doing it anyway. Does that make sense?
It does, but
I don't want to see $1 worth of product or digital assets sold as a utility be subsumed into a security sale if it wasn't a security. That's not good law.
I know, but Jason, like realistically speaking, right? When common sense tells you that 99% of this digital token is being used for speculation as a security.
Yeah. And then they shouldn't be bringing something for the other 1% because that's use, and that's what Forman says. That's what the Supreme Court of the United States said in 1975.
Okay, I'll give you that. I'll give you that.
I'm not asking for much. I'm just saying if 99% of securities and 1% is not, leave the other 1% out of it. God damn it, doesn't belong there.
Well, but you're not going after the people that buy this token, right? You're going after, fine. So whatever penalty you give to the Ripple Corporation, reduce it by 1% for the people that, for the 1% of your tokens that were actually bought for use. Like you're not bringing action against the users. You're bringing action against the company that used 1 or 0.1% of their token and sold it for actual use, versus knowing full well that 99% of the people are going to buy it for speculation. And there's plenty of evidence for that, that they sold, that they pitched it as an investment. By the way, this is not easy to find because stupid block always deletes their damn tweets, but they did do this tweet storm, which they have deleted. And it's all the statements by Ripple people.
Yeah.
From Ripple, like this in 2013, Ripple Labs, that's when they created it. And then all of these statements from people like their senior brass. This is all like the evidence.
So we have to remember that in this case, it's a class action lawsuit of the people similarly situated that bought Ripple for investment. Okay. And so what the court has said is the case is allowed to proceed because it's more likely than not that the plaintiffs are going to be able to show that for those people, it was an investment, right? Not that it's blanketly a security, that it most likely will be an investment. What I don't agree with is the class action, including the entire sale price, right? Because they don't know that everybody bought it for investment. That's where we're splitting hairs, right?
Okay, so let's just.
That's not 1%. You said you give me my 1%.
Yeah.
But this is not an SEC action. This is not a U.S. attorney action. This is a private litigation. So.
And it seems like the SEC is waiting how this private litigation ends, and if this private litigation determines that Ripple is a security, what will the SEC do? But before you answer that question, right, I just want to go through a Howey test fully. So to me, investment in the Ripple token was obviously buying Ripple token was an investment of money.
Hold on. It doesn't have to be an investment of money. The actual standard is the giving of money or money's worth. You give money or money's worth. It doesn't have to be an investment of money. This is.
And we argued this in the case of Ravencoin, where you turning your hash power to Ravencoin is equivalent to an investment of money. It's an investment of hash power, and you pay the internet bill, and it's as if you're investing money. It's investment of money or equivalent of, or investment of value. I like to investment.
Well, and the way that comes about is just, we talk about this with airdrops, right? That it was the Tomahawk case out of Ohio where the SEC said that an airdrop, giving free tokens with the promise that a secondary market would be created later, is an investment contract. And with Ravencoin, people are choosing to run it. No. You gave them software. They're running their software with the promise of a secondary market. It's an investment contract, right? So this stuff gets very nuanced, and it's not just the Howey test. Hell, telling somebody, if you buy this and you invest in this, you will lose money on it, and you can write that off. The very fact that you expect to take a write-off on your investment is the net benefit. That's your reasonable profit, is the write-off. And the SEC has held that buying something knowing you're going to lose money on it so that you can write off the investment was an investment contract.
Interesting. Yeah. That's
so that's where, when people look at Howey and like, oh, it passes Howey, I'm like, dude, there are 80 years of nuanced cases.
Yeah, we did this. We did
You
this with Richard Hart, which was hilarious.
Yeah, well, and you know, when we first did crypto scam on Ethereum, we talked about some of these nuances. But
Right, let's just finish this up real quick.
yeah.
Investment of value into a common enterprise, Ripple Corporation, reasonable expectation of profit derived from efforts of others. And this is where they kind of skipped part 4. So this is actually like 2 separate things, right? So the how is a 4-part thing. Into a common enterprise.
With the expectation of profits under the management and control of others.
And then part D should have been from the effort of others, but it kind of
grouped. And the classic statement is, you know, the giving of money in a common enterprise with reasonable expectation of profits under the management and control of others. Yeah. Not from the efforts of others, from the management and control of others. And this is where the SEC is attempting to bully shape the law the way that they want the law to be, and it's not. Efforts of others. Steven Seagal, how the hell is he held liable for selling securities? He's a paid bag.
Right. No, we covered that last time. Okay. So now let's get back to the Ripple situation, right? So there was plenty of, this link is also in the video description, the early days of Ripple promoting their scam coin. Basically, I don't
hold on. I haven't come to the conclusion that it's a scam coin.
All right.
I actually think that there is some utility that Ripple has, but unfortunately it's being sold by people that like to
Fine, I take it back. I take back the scam coin comment. Okay, so the Ripple.
Well, you would agree that Ripple has some utility, right? That it does work.
Okay, so let's talk about that.
Because I think there's a difference between people selling a coin that doesn't do a goddamn thing, right?
All right, here's the thing, right? And like for some, like I don't want to give away my location, but I am. Let's just say I'm not on a ground floor. And for some God knows what reason, there's little tiny ants in my apartment. And those ants have some utility. It forces me to pay an exterminator to come through my apartment, right? Like just because, and those ants also have a utility to the world. But they're not exactly useful in my apartment, right? So saying that the Ripple token has some utility is quasi-true because Ripple is, you know, taking your dollars, converting them into Ripple, moving the Ripple, and converting that Ripple into, say, the Filipino peso, giving Ripple a utility when in reality, this function would be a lot smoother and better and simpler without the Ripple token in the middle. So just because you have created a utility for X, it doesn't mean that utility actually makes your product better. So yes, there is utility, but it's so dumb and it makes it worse. It's really difficult to argue.
Wasn't Ripple supposed to replace the ACH and SWIFT network? Wasn't that its intention?
I don't understand how you can replace the transfer of digital data.
I'm just asking, wasn't that its intention?
Sure.
I mean, I'm getting older. I was a little confused on my Buttbox, right? You know?
Right. So, like, basically, it's this, right? I can send you an email in digital form, right? And
sure.
That email bounces, you know, through some servers, and you get that email. Now, imagine another company comes along and says, hey, I will take your email. I will use a Ripple token. I will convert that email through the Ripple token. I will then convert that email through the Ripple token, sell it out of the Ripple token again, and I will send it over to Jason. He'll get it a little bit faster because I am using using 2015 database technology and not 1998 database technology. So he'll get it faster, and somehow the Ripple token made it better and faster when it had no reason to exist, right? So just because you stuck a Ripple token in there and claim it has utility doesn't mean that it's actually making anything better.
Fine. So getting to the tweets, what's interesting, Mike Dudas here specifically says that they're going to be doing the Howey test and its application to Ripple very soon. And, you know, so what we've seen in the last couple of years is some abuse of legal opinions, blanketly saying that Forman applies because there's utility and therefore none of the sales is security. And unfortunately, that's once again not applying the Howey test and its progeny correctly. What I would have told Ripple is that to the extent anybody is buying it and you're representing to anybody that buying it would be an investment contract, you're selling a security at that point. So stop representing that it's a good investment. Stop saying that. Don't set that expectation that it's going to be an investment contract. Just talk about how good it is, right? And if you want to sell a security, if you want to raise fund, if you want to do an equity raise, then do a goddamn equity raise. You know, the amount of money that you're going to make will pay for the equity raise versus, you know, trying to conflate it and gray up the
and by the way,
environment.
The problem that I have with Ripple as a utility is the same problem that I have with Binance as a utility, right? Because there are plenty of exchanges. In fact, 99% of 100% of all exchanges before crypto and 95% of exchanges in crypto manage to function without a utility token.
So you're talking about the Binance coin?
Right. So don't give me this bullshit reason that the Binance token has some kind of necessary.
Well, doesn't it have the same, doesn't it serve the same function as Tether?
What, Binance token?
Yeah.
No, not at all.
What does a Binance token do? I don't use Binance. I stay out.
Binance token is an ICO that helped fund Binance the exchange.
No, but what does the token do?
Well, the token is like it's like another ICO, but you can use the token to pay the fees, your trading fees, right? So if you're holding the token in your exchange,
sure,
you can pay the fees on your trades in the Binance token, and you get a discount for paying the fees in the. So if I'm trading Bitcoin, but I choose to pay the fee in Binance token, I get a 20% discount on my fees. I don't know what the actual discount is. I don't trade on Binance, but you get a discount on your fees if you pay your fees in Binance token. So it's kind of like if TD Ameritrade or it's like if E-Trade allowed you to hold E-Trade stock and pay your trading fees in E-Trade stock to get a discount on your fees.
The other way you can look at it is that it's a prepaid membership, and that you have a certain amount of membership points. So do they have Kroger's where you are? Do you know what Kroger is? Grocery store?
No idea.
Okay, so you've gone to a grocery store where if you have their member card, you get cheaper prices, right?
Yes, but you have a member card, but that doesn't come with
I know.
Speculative aspect.
I know. So right from the beginning, you can walk in the same store, general retail customer. If you choose to give your information for them to track your purchases, then you can get a discount on prices. If you don't choose to do that, you have to pay more. That's fine, right? REI, you pay your co-op fees, and you get to shop there, and you get to do that. I don't have a problem with the Binance token doing what it's doing. Yes, it was an equity raise. It's an investment contract to the extent that they created some economic scenario where people are using that in order to get an advantage on trading fees later. Could show that there's an expectation of profit because you have an instant arbitrage play for paying less. I don't know. I think getting into the minutia of whether Binance is a utility or not is getting us into the weeds. It's probably a little boring, but to the extent Ripple is an investment contract or not, if they're contemplating it as an investment contract, knowing that they have to do that analysis, I don't know. I mean, you start looking at the BitLicense proposal, you see how early on Ripple was involved with BitLicense. BitLicense was a joke. What a restrictive piece of crap that is. I'm sorry, am I allowed to say that on the air with your viewers, Tone?
Yeah. Okay, so let's get back to this. Okay, so to me, there isn't much of a difference between the Binance token and the Ripple token, right? To me, they both have a made up use case. To me, they have a made up use case to get around the fact that they are a security. And they will argue that their token has a utility in order.
Hold on a second. Captain Wacko asked the question. Okay. Captain Wacko wants to know if he convinces his dentist to accept DentaCoin. Now it has utility and it's not a useless scam coin anymore. The answer to that question is no. It is a useless scam coin, but if you can convince your dentist to actually take it, it's not utility at that point. It's currency. It becomes a currency, not a utility.
Okay. So, but in that case, right, if Binance is taking the Binance token, which has a financial value for the transaction fees, isn't Binance token a currency?
Arguably, it would be more attuned to script.
Because let me tell you what happened. So I'm in Singapore about 6 months ago or something, before the whole coronavirus thing. And I ran into CZ in the speakers lounge, and we had a little chat. He knows I am critical of his little project. And well, it's not that little, actually. It was a big project. And he was trying to convince me that the Binance token is not a security. And one of his arguments was, well, right behind me, there is a coffee machine and a coffee maker, and you can pay for that coffee in Binance token. So the first thing I replied to that was, so you're saying that the Binance token is a currency? And he said, no.
Well, anything can be a currency. Whether or not it's legal tender is different, right? Currency is actually a good designation for a crypto asset, because that means it's not a digital asset upon which somebody is investing in, thinking that the price is going to go up or down, right? Currency has use. If currency has use, then Forman comes into play. So if I was that guy, I would have said, absolutely, it's a currency. To the extent that you're using your token in-house to fuel your platform, now it becomes script. Script is just in-house currency that usually has a set value that's not a speculative value. So if Binance coin doesn't go up or down.
Exactly. I would have no problem if the Binance token was pegged to anything. This is why, look, people give me shit for Ripple from both sides. Ripple, sorry.
No, we're in agreement. The reason I think Tether is great is that Tether actually has great utility.
Right? I agree.
From an exchange standpoint, you don't have to go from Bitcoin into US dollars. They don't have to keep US dollars on hand. They can go Bitcoin to Tether, Tether to Bitcoin, Bitcoin to Tether to whatever. You can transfer Tether anywhere. You can do whatever you want to do with Tether.
I agree.
And it's pegged to a single dollar unit, and it's great.
I agree. Tether has actual utility. Tether is all about utility. The only question that in Tether is it honestly being operated? That's the only question, right? I don't question the utility of Tether.
No, the question with Tether is the representation that every Tether has a dollar behind.
Right. Well,
that's the big question with Tether.
Well, no, we know it doesn't. We know they've already said it's only 75% because of the Quadriga thing. Not Quadriga, sorry, the something else. But anyway, we know it's not 100% back; it's 75% back. But even that is being questioned. But like, I don't argue that Tether is a utility token. I don't argue that Tether is a security. I don't believe Tether is security at all. And I know.
Well, here's the thing, though. Here's the thing. I got to tell you, Tone. There are days where I'll bounce Tether. I will. I mean, on any given day, Tether can give you a 6-point bump.
Oh no! No. And that's fine. Like
I don't understand how Tether can be 97 cents when it's supposed to be $1, but there it is some days.
I completely understand why that is, right? I completely understand why that is, but that's also like, for example, if someone hands you, if someone says, someone that doesn't know any better, right? If someone has $100 bill, but only 75% of that dollar bill is there, like a quarter of that bill has been ripped off, right? And that person doesn't know that you can take that $100 bill to a bank and they will give you a new $100 bill for it because the majority of that bill is there. Yeah. And but you know this, right? So if you run into someone on the street or one of your friends that you don't particularly like and says, hey, I got this $100 bill, there's only 70, like, I don't know what to do with this thing, 25% of it is gone, and you say, I'll give you $90 for it right now, he'll probably sell it to you because he doesn't know what to do with it, right? So that's the story of Tether, and that doesn't make it security.
Correct. All right, so look, you and I could do this all day. We've done this all day before. Yes. And it's unfortunate that nobody else could jump on, but I'm kind of glad we just get to ramble a bit.
Can you just get to the end here? So look, the final question is this, right? Look, the court can disagree with my non-legal, non-professional opinion that both XRP and BNB are securities. But let's assume that the court, in the case of XRP, let's assume the lawyers are able to get the court to admit that XRP is a security.
Oh, they're not going to be able to get. They're not going to be able to get the defendants to admit that.
The court ruling, they'll never be able to, because if the defendants admit that, they might go to prison. No.
So remember, this lawsuit is a civil lawsuit between a plaintiff and a defendant that the government is not involved in.
Right.
But I've done this before when I've had private litigation against a defendant for a securities action. I actually worked closely. So I clerked for the Oregon Division of Finance and Corporate Securities when I was in law school, and then when I got out of law school and had my own practice, I used to work with them quite often. When I would have plaintiff cases, I would contact them and let them know the cases that I was working on in order to do a collaborative effort of making sure that they were in parallel contact with me, so that while I was building my case, they were basically building their files. So if I was successful in whatever action I had, they would basically be able to instantly go and get their order for violations of securities laws, and then pass that along to the local district attorney to be able to take whatever criminal action they needed to happen there. So you touched on this earlier, that Ripple loses this case, do they go to jail? I don't know if the class action law firm, I don't know if the class action law firm is currently working side by side with the SEC or the California state securities regulators to keep them up to speed or not.
So let me rephrase the question, right? Like, if the plaintiff wins, if the plaintiff wins and the judge rules accurately, in my opinion, that Ripple, the sale of the Ripple token was the sale of an investment contract, aka violation of the Howey test, offering a security. What happens next?
That's what I was getting at.
What does the SEC do, and what happens to the Ripple token? And
that's what I was getting at. See,
from every shitcoin exchange, does it, like, what the hell happens to the company? What happens to the token? What happens to the CEO management, C-level management?
So let's say the plaintiff is successful and this court finds that there was an offer and sale of security. As to the plaintiffs that were in that case, that is not dispositive or holding on the SEC as a finding that as a whole that there were any securities violations that were offended, because the SEC was not a party to that case. So the SEC would still have to bring their own action at that point to get that determination that there was a violation of the securities laws and that was there, in order for them to have any kind of action taken against them. Now the SEC could do that through administrative rulings, but it would definitely be a conversation that they would have between Ripple and SEC attorneys and or California state regulators and their local attorneys that may be working on that as well. Now, let's say it goes to that process and the day after the SEC, or the day after this plaintiff is successful in filing an action, this plaintiff is successful and gets the judgment that there were securities that were sold and they were sold fraudulently, then the SEC would basically file the next day and then get their order, and then and or work simultaneously with the U.S. Attorney's Office to move straight to the criminal component side. Only after the SEC was able to get a finding that it was an investment contract could it potentially order exchanges to remove Ripple. But if I'm an exchange, if I'm Marco, and Marco, I know you're listening, if that judge ruled that Ripple was a security, I would prophylactically move to just have Ripple removed from Kraken, pending the result of some finding or some subsequent determination by a third party like the SEC that said, hey, we know that California court ordered that, but we're going to wait. Maybe there would be an appeal, but pending the results of the appeal or some other party just remove Ripple from that exchange. Because the last thing that Kraken wants or Binance wants or Gemini wants or anybody wants that's listing it is to get in trouble with a regulatory authority for listing a security when they don't have a license to do that. So that's,
right.
Yeah.
So Ripple, but the SEC would still have to come back with its own Ripple after the civil action.
Yeah, because remember, the SEC is a civil plaintiff in that case. The SEC doesn't have criminal authority; they have administrative authority, and they have a right to bring an action in civil court. And the SEC is a plaintiff. Okay, and generally the SEC is a plaintiff, and they are acting on behalf of harmed investors. Okay, so when they seek disgorgement and they seek fines and penalties for securities sold, they're doing that to try to allegedly make investors whole. But if you've got a class action that's already doing that, there can be an argument made by Ripple that the SEC no longer has the standing or the remedy of asking for those things back, because the investors have already been made whole through there. So through the class action lawsuit. So then the SEC is only left with filing for maybe unlicensed, unregistered securities and getting that action announced at that point, which then gets them the ability to, bar people from ever selling securities again, or revocations of exemptions for certain periods of time, et cetera, et cetera. So the SEC can't just act without a ruling. So yes, there would have to be a subsequent action. Well, that was a long way to say that. But,
okay, so what would then happen to the C-level managers of Ripple if Ripple is found to be in violation of security laws in this civil case?
I have no idea. No idea. I mean, let's say Ripple is found to have done that, then Ripple would pay the judgment. There's no, unless they're named individually, right? So, I don't think they're named individually. I think it's just Ripple Labs.
I really wonder what would happen to Ripple token as a speculative asset if it had to be delisted from all crypto exchanges.
Well, as with anything that doesn't have an open market, and as you said, if somebody's willing to pay for it, then that's the value that it has for that day. But I wouldn't see it staying high for very long.
Well, in that case, it would actually become a true utility token to me, right? Like the moment Ripple gets delisted from all speculative trading, I will admit that Ripple is a utility token.
If it doesn't die a terrible death because nobody wants to work with it and the company isn't put out of business because it has to pay a multi-billion-dollar securities fraud.
Why does your token need to be speculatively traded on non-KYC exchanges, even by 12-year-olds?
No, I didn't say that it would. And this is where we both agree that that 1% that's for utility may exist, but that 1%, I don't think it funds the network staying alive. Do you?
Well, I mean, if they sold enough Ripple tokens and they have 100 million actual dollars in the bank, their company can last quite a while, right? They don't.
Come on, man. Come on. They don't have 100 million in the bank. You know that.
If they were smart.
It went to hookers, blow, and laptops. That's the Ethereum model.
Maybe for Jeb and Caleb, have you seen those other guys in charge of that company?
Hookers, blow, and laptops.
And
not in that order. All right, let's take on one more topic before we devolve into.
We are going to do one more topic. So Gordon Einstein should join us in about 3 minutes. Excellent. And we can talk more Forman case or the Telegram token, which he has done a lot of, not a lot, but he's done some talks and he's done other videos about the Telegram ICO and the SEC action against the Telegram ICO. So we're about to have Gordon join us and we'll talk Telegram and maybe.
Talking Telegram and Forman would be really interesting.
Yeah.
I think maybe giving Gordon an opportunity to talk would be a good thing. Well, you've refreshed your drink like 4 times in this show.
Refresh my drink again.
Wait till Gordon gets here. Let Gordon go on. You talk while I refresh my drink.
All right, go refresh your drink. I'm gonna take a look at the price action. I can always take a break and look at the price action.
All right.
I'm gonna do a screen share for the price action, guys. Guys, there's a reason for the madness. Like, I know this is way less viewers than normal for my show because no one really cares about law. But I like keeping these guys happy because if I'm ever in trouble, I have friends I can call. Though they'll still charge me a lot of money. All right, let's go to see some price action. All right, so let's see what we got. So the futures market in the S&P is pulling back a little bit, certainly not enough. I mean, look, my portfolio was skewed to the short side. It was skewed to the short side going into today. I was in full-on disbelief watching the market go up and up and up and up and up because I didn't see it coming. This is where, as a trader, you need to, not let a day like this wreck your portfolio. And while my portfolio certainly took a loss today, it's not a loss that's going to ruin my portfolio. And I'm going to give this another day to pull this damn sucker back down. I don't think we're going to crash all the way down. I think that's a very lofty goal for a giant crash. But if we have a bad Friday, I may potentially hold my positions through the weekend because I find it very difficult to believe that we're going to go much higher. Because now I got to move this Fibonacci set up here. And we did pull back pretty damn close. That Fibonacci shouldn't count. Let me get rid of it. Okay. So I do want to see this pull back further. Let's go to Bitcoin. Let's see what's going on. Here's the 4-hour chart. The 4-hour chart still topped on a 9. We are consolidating, which is a bullish-ish sign, and we'll leave it there. But the stock market also rallied. So let's go back to the daily chart. And my expectation of a pullback in Bitcoin not only has to do with lots of resistance in the Bitcoin chart. And there was a, no, never mind. I'm not going to go there. And it's not only like, look, you have the 20 period moving average. You have the sequential 9. There's like 5 other things that other traders are looking at that is calling this to be a significant point of rejection. And I agree with them. But Bitcoin is still somewhat correlated to the stock market. And because it's somewhat correlated to the stock market, I expect Bitcoin to pull back, but I also expect the stock market to pull back. The stock market did not pull back today. I still believe the stock market will pull back tomorrow and possibly over the weekend into Monday. And therefore, I'm still bearish on both Bitcoin and the stock market. We can glance at how gold finished today and how oil finished today. Hey, Gordon, you with us? I don't see your camera.
No, I am. I was just.
All right. Hey, there's your camera. All right.
How's it going?
Nice background. Jason's getting the drink. He's refilling his drink. I've already refilled my drink a few times. I'm going to refill my drink one last time. And
what are you guys drinking?
I drink a different thing of alcohol every time because I really like to get my buzz on. I never drink one thing. I always mix my alcohol. It's something I've always done. A lot of people say that's a fast way to get drunk, but if that's what your body is used to, that's fine. I don't drink beer, but I drink tequila as my liquor choice. If I have to drink a beerish drink, it's either going to be cider or like hard kombucha.
Hard kombucha?
Yeah,
that's hot, man.
Yeah, it's kombucha with some alcohol. And other than that, wine, but I haven't been drinking any wine while in quarantine because my the apartment that I'm staying in was not stacked with wine. And but it is stacked with liquor.
There's Pink Dot. By the way, Pink Dot and Postmates is the cure for Amazon and Costco not delivering. Just saying.
All right, let me end this screen share. So we took a look at the price of Bitcoin. There's really not much else I can say, guys, other than we just completed a daily 9, and I'm still looking for a pullback into the weekend. Well, the weekend starts on Thursday, I guess. I'm still looking for a pullback in both market and Bitcoin. And let's say hi to Gordon. Jason refilled his drink. I'm debating.
Jason.
Look, I don't want to go through all my bottle supply because I'm still in quarantine. So I'm running low, but I also don't really want to drink straight liquor after drinking a few of these. So I may have to stick to this. I will, Gordon, I will let you introduce yourself and your background while I refill, and then we'll go to the Telegram ICO case.
All right. I'll do the quick version. Happy Passover, everyone. So I'm Gordon Einstein. I am, I think like everyone else on the show, a crypto and blockchain attorney. I have a fascination specifically with securities law, though not just securities law. And I love crypto and blockchain because at least before COVID, it let me travel the world and work on cool stuff. Now we're traveling from one end of my house to the other end of the house and just zooming all day. So anyways, I'm just happy to be here. And Jason, good to see you.
Good to see you, Gordon.
That is a non-virtual background. That's actually your real background.
That is a real background of I got a lot of complaints that I was doing broadcasts from my workspace, which is in the other room, and people were laughing at me for not having any furniture. So I set up in this room today so people wouldn't claim that that I don't have any furniture. I actually
you don't have this completely bachelor life. Got it.
Yeah, something like that. But I agree. I'm traveling from one end of the house to the other, or either that, or I'm going to the other house, which is in South Houston, or to the race shop because I'm working on a Baja 1000 car.
Wow, nice.
Which right now the Baja 1000 isn't delayed, but I
will it
expect
be?
that it will be. Yeah, November's a long ways away. So anyway.
I'm not sure what happened to my.
You don't.
Hold on, let me grab the article of the
It's gonna be annoying to eat almonds as we talk because I'm freaking starving.
Oh yeah, sure. No, I am too. I haven't eaten yet, which is why me continuously drinking is not a good idea. But we're doing it anyway. Okay, so
Thanks for an interesting show. We were talking about hookers and blow earlier. So.
Oh yeah.
Whoa, what did I miss? It's crazy.
Well, so the question. So the one thing we talked about. How much do you know about the Ripple lawsuit? It's a civil lawsuit against Ripple, the Dura security.
The class action in California in federal court is what we're talking about.
Honestly, not a ton. I know the people suing him is claiming it's a security and Ripple's claiming it's not. And the SEC seems to be backing down a bit, but I'm not completely following it.
The SEC is not really involved, unfortunately.
Mm-hmm.
Well, from a logistical standpoint, it makes sense that the SEC would just wait on the sidelines and not run parallel cases, right? They have other resources, or they have limited resources that they can spend someplace else. And if a class action firm wants to take it on and prove the case for them, then great. That means if that firm is successful, then the SEC basically comes in and files their quick claim and files for summary judgment, and Bob's your uncle. It's really just a matter of resources, I think.
All right.
So is it standard for the private litigants the same as for the SEC in this case, do you feel?
I'm sorry, Gordon, what?
Is the standard of proof and what they're trying to prove analogous between the private litigants and what the SEC might be going for later?
Yeah, of course, because the SEC is filing a civil action, so the standard of proof is same in civil court as the SEC would prove. Now, if the U.S. Attorney or DOJ gets involved, then they have a higher standard of proof for the criminal findings. But yeah, so long as it's private right of action under.
Actually, you know what? I misphrased the question. Is the elements of what the private plaintiffs are trying to prove the same as what the SEC would have to prove?
No, I think the SEC has specific jurisdiction on certain questions like unlicensed, unregistered sales of securities versus just sale of securities or fraud. The standards for fraud are the same, standards for sales of securities are the same, but and that's all under 10B, right? But when it comes under unlicensed, unregistered, private litigant doesn't have a right of action for unlicensed, unregistered, right? So the SEC still would have some
road to travel, I think.
Yeah, but not much, right? I mean, if it's determined that it's a security and they weren't licensed to do it, then the SEC basically has they come in, they file their claims in civil court, they file their additional claims, they file for summary judgment right from the beginning, and it's quick and easy for the SEC to wait. I mean, I was telling Tone earlier that I used to practice in Oregon, and I would work side by side with the Oregon State Securities Enforcement Office, the Oregon Division of Finance and Corporate Securities. And if I was running my own private action, I would keep them in parallel and basically share my notes. And the second I would get done, if I was successful, they'd go in and make.
Let me stop you on Tone. You caught me in like a really weird facial expression. What the hell?
Yeah,
I like it. I kept it. That's why I'm laughing.
It's pretty great. Yeah.
That's awesome, dude. Thank you. I totally appreciate that.
Okay, so I watched your
feeling good, looking good, I guess. Okay, yeah.
So I watched you were on a podcast, I guess, with Powell from Ukraine, and you discussed the Telegram. I'm sorry, I didn't mean to interrupt you guys. You guys were talking about other stuff. so you can finish the conversation, or we can move on to Telegram.
Well, I think we covered it. I think
So
interesting point by Jason. Yeah.
So this is in the video description. You can go ahead and check it out. And Gordon, so I want you to just do a quick recap, like the short version of this 1 hour, even though we've been already streaming this for 2 hours. So let's do a quick short version of the Telegram token, and more importantly, the difference between where Telegram screwed up and where Dan Larimer, his dad, Block One, and EOS were able to get around getting in the same pile of shit dumped on top of them like a Telegram did.
Oh, you really did watch the video. Okay, I'm impressed.
I really watched the video.
Okay. So Telegram, did some private placements, not their Gram token, but Gram purchase agreements, early 2018, to investors that were almost certainly qualified as accredited. And after a little knock on the door by the SEC, they filed their Form D, and they claimed a Reg D exemption, and kept the money that they raised from these guys, 1.7 billion, and kept on building out the Telegram open network, the Taint blockchain. Supposedly they were ready to actually launch that blockchain in October 2019, and by no coincidence, their Gram purchase agreement said they would have to return whatever money wasn't used by that date if the blockchain didn't launch. And the SEC jumped in there and said, "Hey, no, you can't do this. This is an unregistered sale of securities. You're aiming at the general public. This is a public offering. Blah 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 blah." If you read the original complaint, I think it's a little shotgunny, if that's a word. So Telegram and the SEC have been tussling back and forth, and they went from cease and desist, I think, to temporary restraining order. And most recently, the SEC was moving for a preliminary injunction to prevent Telegram not from selling their tokens to the public, but from distributing the grams to the purchasers of these Gram purchase agreements, these sophisticated investors.
That makes sense. Yeah.
Well, I'm not sure it does, but we'll go back and forth on it and have a rivalry discussion. And there's a couple, and basically Telegram fought that and they lost. And the court granted that preliminary injunction, enjoining the distribution of the grams to these parties. Now, Telegram, like a day or two later, surprisingly no one filed notice of their intent to appeal that order. But I think that, I come to this from a certain perspective. From my humble opinion, the court screwed up. They also, there's, from my point of view, they misstepped in two places. They made a statement based on a long series of cases that when you're trying to evaluate something and see whether or not it's a security, you evaluate it at the time it's offered for sale, sold, or delivered. And you don't look at it later in time when evaluating it.
Correct.
Okay, now that's great when you're talking about when you have things that are kind of being sold in tandem in the same month, pretty much to the same person, and they look integrated enough that you can kind of bring them together and look at the entire scheme rather than individual thing being offered and extrapolate that, taking all the totality of the circumstances. This thing is a security, it's an investment contract. That is way different from selling these Gram purchase agreements in early 2018, waiting till kind of early 2020, and then saying anything that comes from these agreements, even if they were just now released and not through these agreements, even if they would not be securities, these are somehow tainted because 2 years ago, the originating contract was a security. And what the court implicitly did without owning it is they rebutted what Commissioner Hinman from the SEC said when he said when Howie meant Gary Plastics. Now, of course, that was apocryphal. He was kind of speaking off the cuff in his opinions personally, but he flat out acknowledged that it's not necessarily the case that when something starts off as a security, it's going to be a security for its whole life.
Correct.
Exactly. He pointed out that when, for example, with Ethereum, the platform gets quote unquote sufficiently decentralized,
Right.
that and it kind of divorces itself from the original common enterprise or the original issuer, and either goes into anarchy or polyarchy, that it's not necessarily the case that it's still security. And I think that's
well,
right.
The concept there, Gordon, is that from the investment contract analysis, that something becomes so sufficiently decentralized to where a reasonable purchaser could no longer state that they reasonably rely on specific efforts of any one person, right? That's where the decentralization component comes in, right? So if you're not relying on a specific, or if you can't point to a specific person upon which you rely, then the investment contract analysis fails. And we go back and forth on whether or not Ethereum actually meets that description or not, but that's apparently they cross some threshold to where that's the case. But in Hinman's analysis of that, he withheld judgment and reserve that the pre-sales agreements were investment contracts. I think we agree on that. Now, I think what I heard you saying is that the initial agreements of give me money, I'm going to give you grams at a later date, and you're going to get a beneficial pricing for those grams at a later date. Today, if you give me money now, that's obviously an investment contract. Some would also call that a simple agreement for future token or Marcos SAFT agreement.
It's basically a SAFT.
Yeah, it is a SAFT, which is an investment contract. Now, what you're saying, which is different here, is that the SEC has come forward and said, regardless of that being an individual investment contract, which we agree that the SAFT is an investment contract, that the resultant tokens that are delivered are also investment contracts. And that's the same stuff that the SEC has been telling me with a few of the cases that I've been defending, that regardless, they believe that every digital asset ad infinitum is an investment contract. And this is, I think it was a month ago that we talked about this, Tone, but I said, this is just terrifying news if the SEC is going to take that route, because it completely ignores Forman. It completely ignores everything.
Right. Let me jump in. Right. The SEC is wrong. Okay. And the SEC is not God. They do have delegated rulemaking power, but
Correct.
This is actually violating the statutes and the case law.
Correct.
Okay. And so, and it's clearly illogical also. Suppose they do, hold on.
Yeah. That is assuming that that the SEC is successful, and this is the assumption that the SEC is successful in showing that the grams that are sold today are not being used within the Telegram network for use, but instead are a speculative asset. And to the extent that the SEC is claiming that the grams that are being sold today to the general public are a speculative asset and themselves are an investment contract, then the SEC is not violating the law. But if the SEC is saying, we don't care if it's a utility or not, utility be damned, function be damned, then they are violating their rules and the regulations and jurisprudence of how it's fraudulent.
So I'm with you. If you look at the court's opinion on the preliminary injunction, there was a nice little sleight of hand or avoidance or denial of the very real possibility that post-network launch, grams that would say be newly issued and not routed through these prior investors might very well not be securities. The court did not even wave at the idea that post-blockchain launch, these things would be securities. So here's the question. Suppose Telegram doesn't distribute the gram to these original investors and give them all back their money, and they airdrop new gram to the world. Well, those, at least by, I'm reading into the court's silence, those, there's a decent chance aren't securities. There's a decent chance they're utility tokens. And remember, under Howey, it's led to an expectation of profit. It's not like you have this internal state that you just decide to make up one day. So
Okay.
you look at the facts and circumstances of the relationship, you look at the communications, you look at the optics, you kind of look at the economic substance, all this other stuff. But, why is something, because it's built on blockchain, automatically a security? Why aren't Google Apps licenses, a security also then?
I don't disagree, but tell me what I would use a gram token for.
Access all the functionality that's based on the Taint blockchain that's being built out in Telegram Messenger. The whole big white paper is talking about it. New internet structure, new VPN structure, new e-commerce.
Sure.
And the basic idea of it was it is a medium of exchange for use on the Taint network.
It's script.
Yeah, you can say that.
Yeah, Gordon, I'm on the other side of this argument as well. Like there's, I'm sorry, you don't have to invent your own money to run the product. Like I'm very.
Hold on a second. Gordon,
that may be true, but that's different from saying it's a security.
Gordon, is it me, or has Tone had one too many beverages and his camera's drunk now?
Tone, you're drunk so much that you're blurry in my eyes.
Hold on.
Okay, but Jason, stay with me on the thought experiment.
Yeah.
Suppose it is possible. There's a couple of assumptions. Assumption number one, that it is possible to have such a thing as a blockchain token that's not a security. Heaven forbid. Like if I tokenize this cup of coffee.
Oh, I've been arguing for utility tokens for a very long time. So
okay, we're on the same page.
Yeah.
And assume that it's not just about decentralization. It's simply, if it's functional, if it has true utility, and it's not paying a dividend, and it doesn't provide any enterprise interest, it's not anything different than a Google Apps license. So if grams airdrop to the public now, post blockchain launch, aren't securities, is it really the case that these grams came from this gram purchase agreement that's nearly a year and a half old is automatically security? Is it like a genetic taint that will go down? So
let's go through the thought experiment then. To the purchasers that purchased a year and a half ago, it could be inferred reasonably that those purchasers were purchasing for a speculative intent.
No doubt, agreed, conceded.
Right, and so to the extent that they were purchasing those grams with speculative intent, to them, that is an investment contract. Now, here's what I thought I heard you say earlier, and correct me if I'm wrong. Did Telegram file a Reg D on those?
Yes.
So
Two.
What's the fucking problem?
The SEC's retarded.
What's the I mean, to the extent that those purchasers purchased.
No, I'll tell you the bullshit thing that the court did.
Hold on, Tone. Are we still dealing with an audience that may be underage, where we need to curb our language? Because I get a feeling Gordon and I are going to start getting ramped up into adult.
Oh, you can curse.
All right, cool.
No,
Sorry.
no one, Jason. No one watches my law show. You can curse.
Oh, great.
The Richard Hart episode had a few viewers.
That's right. All right, so bear with me for a second. There's, like I said, there's two screw ups that the court did, and I'm just going to speak bluntly. To get to your point, it is clear that under the current state of law, right or wrong, that the gram purchase agreements themselves were securities, just like a SAF is. It is subject to legitimate dispute whether the resulting gram that come from this are kind of like tainted by their source, given the Hinman and Gary Plotniks and the whole thing that we're kind of fighting for, that you can evolve out of being a security. But suppose they even were security, okay, when in the hands of those original purchasers. Once those tokens are left the hands of those original purchasers and went to the public, I argue they're not securities anymore, and so there's no public distribution, because that public.
So just for the sake of.
Well, hold on. Let me just bring it home. Because if those tokens did not come from those original purchasers, but were newly issued now, post blockchain launch and with functionality, if those are utility tokens, why magically are these grams that originated over there not?
So
Are we
I'm
looking
gonna,
at economic substance? Are we looking at the reality of what they can do?
So no, and I'm gonna call the family resemblance test here, okay?
Yeah.
You and I can go buy stamps all day long and twice on Saturday, not Sunday, obviously, because the post office is closed. And we may buy the collector's edition New Jersey state anniversary stamp because it happens to be there and we don't care, and we put it on a letter and we mail it, right? That's a gram token. But for the person that specifically buys that New Jersey stamp, because it's part of a series of 50 that they're trying to complete to have a set of 50 US state stamps, and the New Jersey anniversary stamp happens to be the one, and a complete stamp means I'm buying it for an investment purpose because the complete 50 set has a higher value, and I can specifically show that my purchase of that, or the government can show that my purchase of that is for investment purposes. My purchase of that stamp is an investment, not for use. Agreed?
I think you're still talking about the original purchases, the grand purchase agreements, not.
No. See, the original purchase agreements are twofold, right? They're the SAFT agreement, which we both agree is there.
Mm-hmm.
But to the extent that that SAFT agreement stated that you were going to get a gram token at a preferential price at a later date, the purpose is inferred, not proved, but inferred, that the only reason that you're getting that gram token is to get that preferential price, speculative price, so that on date of launch that you can sell that at a higher price and make money. That's the SEC's argument. Okay. And I understand the argument.
But they're missing a step. Yes, those grams might be securities when finally delivered to those original purchasers. But post-network launch, if Telegram could issue those tokens to the whole world and they'd be utility tokens, why then, just because those grams are now being resold to the same public?
Because the government has the ability to show that those grams for those original purchasers were purchased for speculative intent, which makes those an investment contract. Now here's the thing. This is tricky.
Now I'm the general public. I take it. Screw them and their intent. In my hand.
But you haven't taken it yet. You haven't taken it yet. And this is where the SEC probably screwed up. It is that they have conflated both the SAFT agreement and the resultant gram issued as an investment contract. Now, yes, they are mixing it up. The gram that was there, or that is supposed to be delivered to the original Telegram purchasers, is now tainted as a potential speculative asset, just like a stamp, right? They could say those stamps that guy bought in order to fill that collection for investment purchases, that's a security, and declare that that's, that forever is an investment grade deal, unless somebody says specifically, no, I'm going to take that gram and I'm instantly going to use it on this day, and I'm never going to put it on an exchange. Here's an ignorant question for me, and maybe for the audience. Does Telegram plan to have grams on a secondary market, on an exchange?
Oh, can I answer that?
Yeah.
If Telegram is actually planning that and they assist in that, doesn't that hurt them in the case that they...
Correct. Yes, but this is what I'm getting at.
It does.
If there's no secondary market, if there's no exchange anywhere that's going to list a gram, if there's no other place to buy it other than through Telegram itself, and the only place to spend it is in Telegram, and it's on some fixed non-speculative price, then the SEC is screwed up big time here. But if grams are going to be on a secondary exchange where there is some
they will be, just be clear.
Yeah, so if there will be, then yeah, those grams that were purchased early on could reasonably be stated, and I'm taking the SEC side here just for the sake of having an interesting conversation instead of an echo chamber, right? Okay. There is a reasonable argument to be made that the intent of the persons that purchased at the earlier date was for speculative reasons. Now, maybe in that case, when the Reg D filing was made, maybe Telegram can show that the resultant grams themselves were included within that SAFT agreement. But unless there was some really slick legal language, I don't think anybody would have thought of that, because I think this is new territory.
Well, let me add,
at least within the digital asset realm, yeah.
So I'm going to kind of go around it and then come back to it. I'll show you how desperate and stretching the SEC and the court was. They pulled out of their you-know-what the idea that, yes, this Reg D that the SEC told Telegram to file, it's not really legitimate, even though the SEC told them to do it. Because all of these accredited investors, they're not investors under Reg D. No, they're underwriters. Because when they bought those grant purchase agreements from Telegram, it was not with investment intent. They never came to rest with them, and they did purchase those with an eye of distributing them to the public. To which I say, that's the biggest load of crap I've ever heard. Because when they bought, and pardon my French again, when they bought those agreements, it was January, February, March of 2018. The network is expected to launch in maybe March 2019. There's 2 rounds of early purchasers. There's round 1 and round 2. Round 2 is a little bit problematic, but round 1, post-network launch, had a 3-month, 6-month, 12-month, and 18th-month holding period, where 25 of the grants could be released at each time. You can't really tell me, I'm going to argue, that a purchaser that buys in January 2018 and has to wait to mid-2020 to finally distribute what they bought wasn't really buying with investment intent. It was just acting as a conduit to get to the market. That's way over the 144 period. That's way beyond everything. And at that point, the mark of an underwriter is that they don't make money on the market fluctuation of the security. They're making money on the markup. They buy cheaply from the original issuer, and this is true in regular securities and also with tokens, and they act as a dealer. So they're making a commission, or they're getting a markup. They're not banking on the stock doing well and going up or down in value. That's what separates a dealer, a broker, an underwriter from an investor. But when someone's having to wait for the network to launch, which is speculative, plus 3, 6, 12, and 18 more months before they get rid of their position, and people, it's already out there or being traded. To me, it's a ridiculous argument that they're really underwriters, right? And if they are, then so is everyone else who holds for a year. And I don't think the court even believed what it was saying.
Well, who's the judge?
Tone, scroll up.
Keep going. It's not Stanford.
I guess I'm
judge. Go back to that last screen. So what's interesting is Jorge Teñero is one of the attorneys on this case.
Mm-hmm.
I have sat literally physically across the table from Jorge Teñero, and
Okay.
I found him to be very aggressive. He was very unprofessional towards my client at the time when I was there. He was unprofessional towards me, employed multiple bully tactics that basically made me lose all respect for the SEC. And I don't mind saying that, and I'll say that any day of the week and twice on Sunday.
I'm actually impressed that you just said all that. My compliments.
Hey, Jason, are you at liberty to name the client? No?
I cannot name the client.
But it's Judge Castell. Whatever that means.
So where I was going with that, Gordon, is that I wouldn't have expected that much legal chicanery from Judge Rakoff. But regardless, it's still the Southern District. No, it's not Rakoff.
It's Castell.
Well, I'm not familiar with Castell, but I'm familiar with Rakoff.
I respect Judge Rakoff immensely.
I can't believe he's still the New York federal judge. He's been there like 25, 30 years.
Rakoff?
Yeah.
Rakoff is a god in the securities world.
Want to meet a god.
What's that?
It reminds me of that line from Ghostbusters. Are you a god? Ray, when someone asks you if you're a god, you say
yes.
Yeah.
Well, it's definitely interesting to call them underwriters. I think that's.
I hear like a ridiculous.
Yeah. Okay. Jason, I want to belabor something because I feel like I can.
Oh, what is that? Okay.
Okay.
Hey, can I just back this up a little bit? So, Gordon, so I look, I understand I'm almost, am I the only
What are
one?
you feeling, Joan?
Am I the only one hearing this like high-end pitch?
No, I hear it.
Okay.
I don't know what it is.
I do not hear a high-end pitch. And because of that, I'm gonna mute my microphone and you tell me if it goes away.
Yeah. It went away.
You all muted together, so whatever.
Okay, so look, I'm with you on this. Like, of all of like the hammers that the SEC was going to throw down, it sucks that it's over a Telegram token that's not even being, speculatively traded on, non-KYC exchanges in the crypto space. Like, it's frustrating the hell out of me. Okay, and I'm also with you.
Is the high pitch sound back? Because I moved back to the headset instead of the microphone.
No, it's gone.
They were okay.
So look, I'm with you. And while I do believe that anyone that bought the Telegram token did it speculatively and not for utility, this is probably not the case I wanted the SEC to throw their hammer on. Now, at the same time, here's the thing. Like, I know you guys are, probably like Jason's a defense attorney quite often. I don't know.
But I also do plaintiff's work. This is too small of a field to just ride one side of the fence. So
here's my issue, right? Like, as much as I hate the fact that the SEC went after Telegram of all things, and I love Telegram, I use it all day, every day. But at the end of the day, if, let's say, I was brought in as an expert witness, God forbid anyone sees me as an expert, but if I was brought in as an expert witness, I would call complete and utter bullshit on the Telegram token being a utility token. Like, at the end of the day, no one is buying this shit for its utility. Like, I'm sorry, like, there's no utility in a Telegram token, not when it's intended to go onto a secondary market, like eventually, right? Like it.
Don't I gotta.
There's no need for utility here. I'm sorry, Messenger.
Let me know when I'm released to it. Like, respond.
All right, go ahead.
Yeah. Sorry, you're wrong. Okay. So Telegram raised 1.7 billion. Unlike almost every other situation like this, there was zero allegation or innuendo in the SEC filings or the court opinions that Pablo and his brother did bad with that money. In fact, if you look at the court's opinion, it's kind of complimentary about them and mentioning that all the time they ran Telegram, they didn't take a salary. They were supporting it out of their own money, from the money they made from mail to RU and from the contracting.
I mean, it's great. They're honest guys. I like them.
Hold on. Okay, the money that they raised, the 1.7 billion, they plowed about 450 million of it into software development for the Ton blockchain network. That is in the stipulation of facts between the SEC and Telegram. Okay, that is a huge dedication of resources to something that could be extremely beneficial, and that is not to sell things or make a profit or do this and that. Every bit of that was R&D and platform building. So to jump to the conclusion that $500 million of investment like into getting something done wouldn't produce any utility, I think is a real freaking stretch.
No. Okay, let's backtrack here. Look, I love the Telegram app. I don't want the Telegram app to die. I use it all day, every day. I hate WhatsApp. I hate Facebook Messenger. I love the Telegram app.
Mhm.
I believe that the brothers that created that app, they're good guys. They're not bad guys.
Mhm.
I'm happy that they did not spend that money on hookers and blow. I'm happy that they used it
Mhm.
properly. It's great. But I'm just saying the token itself was a way to raise money to make their project better. I agree with you. I'm not disagreeing with you. But what I'm saying is there is no need for a utility token. There's no need for it to exist. Like, you can raise money for your platform without a utility token that isn't needed. Because
what is
there's
the value? Okay, but
no reason for it to exist.
then you're gonna sell traditional securities. What are you gonna do with them? What are they interested in, and how do they make a profit?
Well, how did Facebook make a profit?
Selling people's personal information, which is exactly what the Duro brothers don't do. Hence, they had to leave Russia. Next question. And by the way, professional Russian.
So,
I'm with you.
first, hold on, time out. I'm gonna be a referee between you two right here.
I love Tom, by the way. I miss him.
So, you're both correct. All right. And I'm saying that because, yes, Tone. No, they didn't need to do that. But Telegram is, and I use Telegram. We all use Telegram. Is a fantastic application. But a revenue stream for Telegram to exist and continue to thrive is almost non-existent. It's very hard to monetize Telegram in its current form. And so going this, and I think we can all agree on that, right? I mean,
100%.
They don't sell information. They don't have advertising. The only way that maybe Telegram could make any money is through a paid subscription, but people would just move on to a different platform if they wanted to have a paid subscription, right? So creating a tokenized economy for services makes sense to where they can try to monetize it. So the sale should have said, look, we don't know how to monetize this goddamn thing. We're trying to sell ourselves as a business. We've got grandma's spaghetti sauce here, which is Telegram, grandma's spaghetti sauce. We're trying to figure out how to sell the spaghetti sauce in the market. And this is what we're choosing to do is we're going to sell tokens, and that's grandma's spaghetti sauce. God damn it.
All right. And
But
look,
instead, they had somebody tell them they had to go the traditional ICO shitcoin route and do pre-sales and periods of pre-sales and all kinds of other shit that just tainted the whole thing and made it cheap, right? So,
well, hold on. So is the SEC's position is that pre-functional security tokens, pre-functional utility tokens are securities at least until they become functional?
Well, yeah, and I don't agree with that statement either.
I don't either, but that's
they make it as a blanket statement that you're selling something for something that doesn't exist. It's not dispositive, but in the Hinman article, How We Met Gary Plastic, they said it's one of the key components of determining whether or not something is or is not an investment contract to the extent that they're selling something for an existing network or not. Here, they have an existing goddamn network.
Well, they don't have a blockchain network.
I don't care. They've got an existing platform.
Nobody
they have
has a
existing
blockchain
software.
one
Doesn't
blockchain
matter.
functioning. Bitcoin.
They have a existing platform and software that works in a proven business model. To me, that shows that they have software that works. Whether or not the token that they're trying to use integrates already with the software becomes a question of fact on whether or not it's dispositive, right? On whether or not it is an investment contract. So
I'm not sure I'm with you because if the token doesn't work, okay. I think bear with me. I think what the SEC has done.
Hold on, Gordon. I think we agree. I know we agree. What the SEC is saying is that somebody that raises money for a platform that doesn't exist except for in somebody's head is obviously selling some form of speculative thing because it doesn't exist unless they get the money to build it. Whereas with Telegram, they have an operating structure already. And yes, it may be considered an equity raise, but on the continuum of something out of thin air or whole cloth versus an ongoing concern, Telegram is obviously an ongoing concern. That's where we agree, right?
Granted, and I'm also going to point out that by the SEC treating pre-functional utility tokens as securities, they're going against federal law and they're adopting the California risk capital test.
Yes, yes, that's right. Yes.
Okay, which is actually the
that was the golf course case, right?
Yeah,
in California. Yeah,
that's exactly right. You know, pay a lower price now. We'll use the money to build a golf course, and then you'll have a cheaper membership. Okay, you know, and they think, oh no, because now you may not get built. You're co-venturers with the builder. You know, and there's something to that, but that is not Howie.
But that happens all the time with real estate when you buy condos, buildings that haven't been built yet.
but here's what you got to remember, Gordon, and you know this: the SEC will use any argument they can out of any state or any jurisdiction in order to advance whatever it is that they want to do, regardless of the jurisdiction that they're in. So
100%.
this is adjudicative rulemaking, and they press it all the time. And if I was the SEC, I'd do the same thing too, because it's more efficient than doing notice and comment.
Well, let me put it this way. Section 2B of the Securities Act says that when making rules and taking actions, the SEC will take into consideration capital formation, efficiency, all that other stuff. And the Congress added that section in there because the SEC was being a bunch of little, you know, bees. I can't even use a word on this. And they needed to dial back. Well, what's going on is the SEC is causing a strategic disadvantage to accrue to the United States because there really was nothing wrong with what Telegram did. It wasn't a fraud. They were putting the money into the platform. The tokens, sorry, you know, tell them they weren't going to have utility. You may not have agreed with the fact that they need these tokens to do it.
So Gordon,
yeah,
you and I, Antone, you can agree as well, I'm sure, that the pre-sales activity, what was it, 1.7 billion, 1.9 billion, absolutely an equity raise.
That's a nuanced statement. Why don't you expound on that, and then I'll go deeper.
And to show that that's stipulated, they filed a Reg D on it.
You can do a Reg D for any kind of security.
Sure, but the point I'm getting at here is those purchases of those agreements, investment contract, just like the pre-sales of Ethereum were investment contracts.
Who did
how does that get you to equity?
Did not file a Reg D, by the way.
Correct. Who did not file a Reg D?
No, Ethereum was 100% a security when issued.
Yes.
It's funny how everyone kept quiet.
I spoke out against it back then, back in 2015.
And by the way, I don't say that to condemn it. I think it's great. But notice how it just kind of slid by. But you know, when I think about the equity,
well, the reason it slips by is that it's too hard to enforce today how much or what percentage of the sales of Ethereum after launch and when it exactly occurred to where it is or isn't a security for the actual Ether tokens that are out there. That's too hard to quantify, and they can't put a fact witness that's reliable on the stand today to be able to testify to any measurable certainty of when it actually occurred or when it didn't. All we know is that right now, today, it's not. It was at some point, but today it's not. And they don't know when that happened, and that's why they're never going to bring that. And what they're doing is they're jumping on Telegram today because they do have a definitive date of when that's happening. And I don't know. I think to get back to the earlier points, I don't think Telegram is the right company to go after for this. Just like I didn't think Eric Voorhees was the right guy to go after for Satoshi Dice, but he didn't register. So
well, they went after Eric Voorhees because he didn't file the right paperwork. That was just easy.
So do you want to think about how EOS was different?
1 second. We'll get to that. So, Gordon, you said a few minutes ago, I'm trying to quote you directly, but you said you don't see where Telegram went wrong. And again, I myself as being in this space for 6 years, and I think Jason's been in the space a little bit longer than me. I like, look, if I have to, under penalty of perjury, if I had to find a use case for Telegram token as a utility token, I can't. So they look, I hate the fact that the SEC is going after them also, right? But the problem that I have with the crypto space is that everyone and their mother is coming up with bullshit utility cases to get around security law. And while Telegram did their best to file the right paperwork to be a security, the only problem that I have with the Telegram token is that they're bullshitting about the utility need for the Telegram token. And I wish they somehow raise money. Like, how the hell does Zoom make money, right? Like, I'm actually, well, I guess I know how Zoom makes money. I'm paying $500 a year. But like, we're here streaming on Zoom, and Zoom did a public offering, and they're an IPO, and I mean, the fake Zoom did better, but the SEC finally shut that down. So look, I want Telegram to make money somehow, and it would be great if they came up with a way to create that security that they did and be an actual security, not a bullshit ICO. And I don't know how they could have made money. I'd have to think about it a little more, but if they put in paywalls inside their messaging app, people will just go to another app because it's hard for them to compete with, say, WhatsApp, which I can't stand, by the way. I can't stand WhatsApp.
Let me know when I may speak.
All right. So go ahead. So that's my only problem.
Gordon, I've missed you so much. That was awesome.
Thanks, man. Hey, Tone.
Yes.
I'm going to be listening in, but I got to step away for a second.
Okay. Good deal. Tone, take a big policy step back. Okay. We should not be, as a proud American and proud citizen of the world, we should not be trying to thread this securities law needle. We should be asking what benefits the country, what benefits the economy, what benefits the people. The fact that these companies are having to tie themselves into pretzels to avoid as best they can the categorization of a security when everyone knows what they're selling and when everyone knows what they're buying is ridiculous. Because I don't want Telegram to be forced to implement for-pay services when they really want to give them away as part of the package out of fear of avoiding securities law. It is anti-innovation. We're hobbling the development of these models. So it's not the models that's wrong, it's the law that's wrong. Yeah. And I gotta throw another thing at you. The characterization, you got me, I'm gonna talk. The characterization of Gram by Telegram was not strictly a utility token, it was the currency of that network. Now, you may say that's necessary or not necessary. They could use Ethereum, they could use Bitcoin, whatever. But without adding more, currency is not a security. Currency is a commodity. A dollar is a dollar. Okay? So it's even a currency or money or value when a private person creates it. So there's a perfectly plausible, you may not agree with it, there's a plausible idea that they wanted everyone in the world in a Libra-like style to be able to transact business on Telegram without swapping currencies every 10 seconds. Okay? And we can go back and forth on it, but it's not insane. But the fact that they were coming up with this thing doesn't make it automatically a security. And the SEC is full of it. You may not speak.
All right, look.
Well, I see my wife messaged me, so please don't.
Hey, tell her I said hi.
I will.
Look.
I'm listening.
Okay, so let me read a comment from Adela. You know Adela.
Okay. Yeah.
You know Adela.
Take a picture of us for her. Okay.
You know Adela, of course, right? Bitcoin.
Yeah, of course, it's good.
Tone literally just disrespected every single non-American in the world.
Tone. Hi.
Okay, look.
Oh, sorry, I had to send it to Marina, my honey. I miss her. But okay, why did you disrespect everyone?
I don't know, but our lovely Adela says that I just disrespected every non-American in the world. Okay, so I have one little problem with what you said, and what you said is that somehow innovation is being prevented here. And look, my argument is this: I don't feel that innovation requires solicitation of money from the unqualified investor.
Well, y'all, I'm sorry, you just used the conclusive word investor. Okay, what if you're selling something like a license to Microsoft Office? I don't like it. I do like it. I'm sophisticated. Make up your own freaking mind. Do some research.
A Microsoft license is, you know exactly what you're buying. When the guys in charge of Telegram go on stage, fictional, like not a literal stage, but when the what's the names of the Telegram guys again?
Pavel and his very talented programmer brother who doesn't really show his face anymore.
What's the last name?
Durov.
Say again.
Durov. And how do I know this and you don't, Mr. Russian?
I know. Well, because I don't pay attention to who owns certain companies. So look, when they go on stage and say, we are going to build a Telegram blockchain with a native Telegram token, me being in the blockchain space longer than half of its lifetime, I call bullshit. Okay. So by me calling bullshit on their project, this is where I have a problem. I would love for them to raise money because I love Telegram, but my love for Telegram has a conflict with the creators of Telegram building bullshit and using the Satoshi's white paper as the backdrop to them selling you a bullshit utility token, which I know is not going to do jack shit for utility, right?
So let me jump in. So let me jump in just for a second. One of the earlier arguments and concepts for the use of cryptocurrency was for its ability to be able to process micropayments efficiently. Mm-hmm. Agreed?
I think the Lightning Network can do that. Yeah.
Sure. So to the extent that you have Telegram that's trying to figure out how to monetize its platform in a way that won't offend people, but still wanting to monetize its platform without going the Facebook route of selling private information, et cetera, I'm all for them developing a micropayment aspect of their platform, because I would gladly give micropayments for use of the Telegram network to support being able to use the Telegram network in the future, because I like it, I use it. I find Telegram has great utility, and I respect the fact that I've been able to use it for free for multiple years now. In a capitalist world, I think that people should be paid for the utility that they create. So here we are at the confluence of that economic reality where Telegram's trying to figure out how to do it. They're trying to do it in a way that creates not only the utility of them being able to accept payments, but do it in a way that isn't going to abandon their entire user base, right? So in that tone, I agree with you that doesn't necessarily have to be some form of a scammy type offering, but I also don't think that it's scammy. They're trying to work within the infrastructure that they have with global regulation and international regulation, sales of securities and investment contracts. But how do you do that in a way that doesn't violate existing laws? And we're at that intersection where the SEC says they get to regulate all these types of things because we have given them that power for 100+ years in blue sky law before federal law to make sure that grand promises are not preyed upon for the non-educated people. And that's the point that you brought up, Tone. But at the same time, Gordon, you brought up, well, fuck, they're not they're not doing anything dangerous here. Why not let them do it? It's stifling innovation. So the crossroads that we're at with Telegram, I think for the first time in the crypto world, is you have a legitimate ongoing concern of Telegram trying to figure out how to monetize themselves using a micropayment platform to monetize their ideas. And unfortunately, they're running into a regulatory authority in the SEC that is saying, no, you don't get to do it the way that you're doing it. And instead of saying, all right, well, find a different way to do it, we're just going to tell you absolutely no. And by the way, you're a blatant rule regulator, you're a blatant rule violator, and that's going to just bring it all to a halt. So as we've seen, Gordon, through the years, the law finds a way to find that happy medium ground eventually. It might take decades to do it, but so long as this proceeds on the path that it is, my predicted outcome is that the SEC is going to win this battle. Telegram will still get to launch its Gram to new purchasers, but the original purchasers are going to have to forfeit whatever it is that they purchased and not be able to release those tokens. And Telegram's going to have to give that money back regardless. I mean, it's a terrible end result, but that's my crystal ball here.
No, Jason,
what I see happening.
Sorry, Tron, I gotta do it. So Jason, so here's another thought experiment, and don't add more facts, just take it as I give it.
Yeah.
Suppose that these original investors had a 10-year lockup period post network launch. So the Gram tokens get released tomorrow and everyone's using them. You know, half the world dies because of COVID-27, but finally in the year 2030, okay, these original purchasers can release their Gram. Okay, at that point, can they? Are we kind of remembering ghosts of ICO's past and staying haunted about it for the rest of our lives?
Well, it's an interesting thought experiment as to how long does an investment contract need to be wrapped up or locked up before it's deemed to be market making or market significant, right?
Or how long do you wait until you acknowledge reality that we have a functional network and these Grams, once they leave these original parties' hands and get to the very first buyer, they're no longer securities because there's no expectation of profit from the original issuance. It's at the market and it has functionality.
Well, I think the only
it's supposed to make you uncomfortable doing that the day after it launches. What about a decade?
But Gordon, you can't say it has functionality without, to me, specifying what that functionality is, because I will question that functionality, and this is my problem.
Okay, no, 10 years later, okay, everyone's going to know whether or not it has functionality or not. Anyone buying it won't be buying it for the initial ICO pop. They'll be buying it because it's usable or not.
But it won't, like, I see here, this is, Jason and I talked about this before you joined. Like, if Amazon, all of a sudden, you order from Amazon, right? You spend enough time.
I had to.
Right.
Now.
You order from Amazon, right?
They don't deliver, but yeah.
So if Amazon allowed you to pay for Amazon goods in Amazon stock, does Amazon AMZN now become a utility token because you can use it as
you're creating a false equivalency here. Yeah, it's a false equivalency. The reality of what you're asking about, Gordon, is 10 years from now, whether or not the tokens are still tainted if they're locked up for 10 years. I think they're more tainted if they're locked up for 10 years than if they're released on day one. And the reason being is that, to those original 175 purchasers, now you have 175 tokens that are 175 users that have purchased tokens that are now going to dump them on the market because they finally get the payoff. What I think is required is some form of statement or some form of affidavit or some sort of proof from the 175 original purchasers that they purchased those grams to be used in the network.
Okay.
And the lockup
gram.
is the lockup is, Gordon, that they are not allowed to sell them in a secondary market on a secondary exchange, but they can only be used within the network. And now you solve that problem, right, of utility versus speculative use.
Okay, now what? But who says it was illegitimate for them to purchase the grant purchase agreements under a properly filed Reg D? I mean, why is that?
Because
wrong?
we're talking about the filing technicality here, that the Reg D was for the SAFT, not for the token.
Right. So, but it is.
And where it's been conflated is that the SEC is claiming that the resultant tokens delivered out of the SAFT are also speculative instruments, and that it should have been some form of conclusive agreement or analysis, maybe through registration or what have you, that the resultant tokens that these 175 purchasers are not themselves also investment contracts. Right.
Okay. Here, let me throw this one at you.
Because there's two things, right?
Here, chew on this one.
Yeah.
You buy stock in a gold mining company.
Yeah.
Dividends are allowed to be paid, as you know, not just in money, but in kinds. Suppose that gold company takes the money that you give them. They haven't built the mine yet. They start mining. They mine gold.
Yeah.
And rather than paying you in dollars, they pay in the gold they mined. Is that gold now a security?
Well, technically, they wouldn't pay you in gold. They'd pay you in gold certificates, and the gold certificates would.
No, just take it as I said it. Just take it as I said it. They're handing out Krugerrands.
Sure.
Here's your dividends. Is that Krugerrand now a security? Forever change it, even though it's like every other Krugerrand.
Under what the SEC is proposing, yeah.
Okay.
I'm not saying I agree with it, but under what the SEC is proposing, yeah.
Okay, so we have to clearly distinguish what they're saying and what we believe.
Yeah.
So in your opinion, would that gold be a security?
No, I think it's more of a commodity and would be classified more as a commodity, just as if grams are supposed to be currency within the network, that would be a commodity. And then, the CFTC has jurisdiction, not the SEC, over the classification and administration of that.
That's right. So why are the grams securities? It's the same freaking thing.
It's the overreach of the SEC. Right?
No. Hold on a second.
Hold on, Gordon. We've agreed on this the entire time.
I know. I'm going to throw something else to do. Suppose a original investor in the gold company gets paid their gold dividend, and they're walking around with a Krugerrand, and the SEC convinces the court, because the court's dumb, that those Krugerrands are securities. Suppose one of those Krugerrands falls out of that guy's pocket and he walks down the street. Meanwhile, Nancy across the street is walking down, breaking the shelter home rule, picks up the Krugerrand and goes, wow, that's cool. Is that Krugerrand still security?
Well, to the extent that the gold itself as, species is not trackable like blockchain items are, then no, it's not. It converts as to her. But because
why does it not the gram convert as to them?
Because in this scenario, a telegram isn't just dropped.
All right, so you know what? Original purchaser John, you got Alice and Bob. Okay, Alice bought stock in the gold company, got a Krugerrand dividend. The SEC took their LSD and decided that this thing that's been a commodity for all of human history is now magically a security. Alice goes, well, that sucks. Okay, meets Bob in a bar for a little, COVID tete-a-tete. Sells Bob the Krugerrand, not saying where it came from. Just, hey, you want to buy this? Bob goes, yeah. Pays the money and takes the Krugerrand. Okay, no sales pitch other than look at what I have. buy it. Look at it for what it is.
Yeah. But now you're bringing in the UCC and subsequent purchaser in good faith, right?
No, I'm not talking. It's not like
What the real answer is,
Yeah.
is that to the extent that the original 175 purchasers
Mhm.
take the gram and actually use it in network for its intent, that specific gram at that point in time is no longer a security. But to the extent that that gram gets used as a negotiable instrument within a secondary exchange, the argument is that it very well could be a security as to the original purchaser. Because as you and I know, and we started off the conversation this way, going back to the original application of the Howey test, every purchase is examined as to the date of the purchase and the intent at the date of the purchase of whether it's an investment contract or not subsequently, right?
Yeah, but I bet if Howey had been about a gold company that paid dividends in gold,
but it
they
wasn't.
wouldn't have said, you know, right? You're right. All this gold is now a security. They wouldn't
But
have
it
been
wasn't.
put in.
It was about
Huh?
orange trees. It was about orange trees and oranges.
No,
right?
I know.
Not gold. Because gold is regulated by the CFTC. It's a commodity.
Well, so is orange juice.
Exactly. But selling rows of oranges and the management of those oranges and the expectation that the selling of the oranges, the management of the oranges, the service of taking those oranges to market, all of those things will be done for you. And at the end of the day, you'll get money. That's the investment contract,
I
not
agree.
the underlying deal.
And the court looked in Howey and said the vast majority of the people who got these plots got the management contracts, never visited there again, and just got their payments. Okay, but suppose Howey had said, I'm not giving you payments. I'm literally shipping you the oranges. Are you telling me those oranges would be securities?
For the people that didn't take the management service, for the people that didn't
Howey
satisfy?
Says, you know what? I'm selling you the plots of land and I'm selling you a management contract. But guess what? You're going to receive payments in oranges. Sign here.
Mm-hmm.
Okay. Are those oranges securities?
No, the orange is then a commodity.
Okay. So so we just established that just because the origin document is a security, the proceeds, the results of that aren't necessarily securities themselves. You have to look at the essence of what it is.
Correct. And so this is where we get into the economic realities or the California test, right? I'm
not sure California is economic reality, but you're getting to the risk capital test.
Yes. So the point of that is, or family resemblance, right? What we still have to, and what we don't know, and I doubt the SEC has done because they cut corners, or at least Jorge cuts corners, and I don't mind saying it.
I love that you said it. You're like my man. Okay, yeah.
I don't believe for 1 second that the SEC has put into or deposed a single one of the 175 and asked what their intent was upon receipt of the grants.
That's not correct. So if you look at the opinion and the attached documents, part of what they used as evidence against Telegram was statements initially by Telegram that these things are going to increase in value, and they actually said that in white paper. And also, they got some commentary from the original buyers that despite this disclaimer of investment intent, despite the affirmation of investment intent and the idea that they weren't going to turn around and sell it, that was in the grant purchase agreement, that the underlying reality was, yes, they were. Plus, the court also looked beyond that occasional admission and said there's no way in hell that these people weren't buying to turn around and sell later.
Right. But so how many did they interview? How many witnesses did they actually depose? Right? Because one is anecdotal.
Yes.
Right? All 175. Under Forman, you have to know all 175 to be able to lock up all 175 purchasers. And this is what Tone and I were talking about earlier.
That's so interesting. Okay.
Right? Because you have to take each purchaser as that person individually to determine, and this is securities law, as to that person, did they purchase as an investment contract or not? Were they going to use it or not? to take one person's anecdotal testimony and declare that it's the same for all 175 fails securities law.
That whole thing failed.
Yeah, can I interject on that one, right? Like, because they're selling a token that they claim will be a utility token for some future use of a blockchain they haven't started building yet. So how can you take a statement, I'm buying this to use it seriously? Even if someone said it.
You know what?
Because I can hold on, I can raise my hand right now and say that if I had been one of the pre-purchasers of the Telegram tokens, I would have said, I use Telegram every goddamn day. And if they are going to be providing services, enhanced services that require me to use grams, and I can get that at a discounted price on a pre-purchase gift card ahead of time, damn right I want to do that.
Well, Jason, I'm going to say the same thing, but the reason why I'm going to say it is because I know that I don't want my tokens to be classified under securities law.
No, that's I can show years of use of Telegram.
Oh, so can I.
Right?
Well, okay, sorry, guys, the court addressed it also. So two things. The court pointed out that the purchasers of these grant purchase agreements, the parties that Telegram solicited and the actual purchasers were not cryptocurrency aficionados and text and everything else. No, they were just evil venture capital. So we can impute motive to them because of their lifestyle. That's number one. And they actually said that in the opinion. But Tone, to directly hit your issue, the fact that I buy something with expectations can go up in value does not automatically make it a security. Okay, people invest in gold all the time based on the idea it's going to appreciate. Okay, going up in value is insufficient. So if hypothetically the SEC screw their head on right and acknowledge that yes, the grant purchase agreements are securities, but the things that they're now going to take that money and produce aren't, the fact that those things that are coming out of it may go up in value over time doesn't automatically make them a security. So yeah, those original people could have said, yeah, of course I want grams to go up in value, and then I'm going to sell them. That's fine. I want gold to go up in value, and then I'm going to sell it. That doesn't magically transmute gold into security.
No, Gordon, I'm with you. I'm with you. Here's
hold on. This is where Forman comes into play. All right. This is where Forman comes into play 100%.
All right, we've mentioned Forman all the time. Can we officially give it a full?
Sure. United Housing versus Forman. Basically, the 10-second review says when you purchase something with the intent to use it, it cannot be a security. That's the down and dirty. Gordon, you want to take it beyond that?
Look, I basically agree. I mean, there a little bit more background is that there was a housing development that was being built under a law that was designed to encourage low-cost housing. And in order for tenants to occupy the property, they had to buy stock, and I'm using that term advisedly, in the cooperative or company that was running the property. They bought the stock for $25 and they could only sell that stock, and they had to have it when they were in residence. And when they left, they were required to sell that stock back to the issuer for $25. In other words, it's sort of the original stable coin. And that stock, and then what happened is the dues that were associated with living there went up over time, and the tenants got really pissed off. So they sued the issuer saying that you broke all kinds of securities law, fraudulent inducement, this, that, and other, blah, 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 blah. And what the court did is they had a moment of complete clarity. And they said, yes, we understand that under Section 2A1 of the Securities Act, securities defined as a stock, a debenture, a bond, blah, 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 blah. But we're going to disregard the label that's associated with something and look at the economic substance of the transaction and the expectations of the parties. You get to what's really going on, the real story, rather than going by the sort of superficial phantasm of the name. So Forman's actually sort of a backdoor acknowledgement of the investment contract. I'd be kind of curious, Jason, I'm going to throw this out there. I'd argue every securities and investment contract would just have specialized types, like a stock, like a bond, or whatever.
Correct, yes. But the distinguishing factor in Forman was that the court said, sure, you paid $25 for a share, and yeah, you were required to buy that before you could buy the house. But you bought that because you were going to live in the goddamn house.
That's right.
right?
And in fact,
And
it's a
you were
requirement
using
that you live.
Yes. And so what that meant was when you purchase something with the intent to use it for you, it is not an investment contract. Versus if you purchase a condominium
Mhm.
with the intent to lease it out to somebody else, then it's an investment property. And the person that sells it as such is selling an investment contract, and you're purchasing an investment contract.
Sorry, I gotta disagree with you, because when you're buying a property that you are gonna lease out, it's not primarily through the efforts of other anymore. Otherwise,
Sure,
every
sure,
condo.
the point is that you're not
Yeah.
using it. You're using a management company. You're using all kinds of other things. So that there are absolutely REITs. There's absolutely real estate investment trusts, et cetera. You can buy real estate
Yeah.
and have it be an investment property versus buying real estate and saying, no, I'm living there, or that's my vacation home, right? Sure, as to what you said, Gordon, you expect the price to go up. And it can pay off if you sell it down the road later, but that doesn't make it a de facto investment contract, because Forman says if you are purchasing it and your intent is to use it and be something of your use, it is not an investment contract.
Okay, so I'm gonna agree with you on that, but I'm gonna add also, I think what's really helped the court get to where it wanted to go wasn't just the subjective, was believed subjective or maybe provable objective expectations of the parties, but there were structural limitations on the price of the stock and the use of the stock, such that they really, when you took off the hood and decomposed that object and looked at its component parts, it really didn't have any of the bells or whistles of a real stock. It was just, it was a shell of a stock. It was a wrapper around. Is there a wrapper that was called stock around something else that wasn't a stock?
Yeah, it was, if you look at it, there's a lot of people that use the word invest, right? I'm investing in my future. I'm investing in my education. And those aren't investments. That's just a way to get a personal attachment or some form of connection between the person and what they're doing in order to have some form of emotional or mental commitment to a venture. And that's what this was designed to do in Forman, is by saying that you're a shareholder, that you hold stock in this nonprofit, you're somehow more vested in the community. And that's where the court, in a moment of clarity under, I think it was Justice Powell that delivered the opinion of the court, really cut through it. With Telegram, we don't have that scenario. We don't have some altruistic intent, right? All we can do from Forman is derive that it's for use. So out of Forman, when there is associated use and you're going to be using something to the extent that that use is the primary purpose and there is no expectation of profit, instead you're going to be using it for its utility, regardless if that price goes up or down, you were still planning on using it for the purpose that it was intended to be used, not a security. So I would like to see, of those 175 that were there, if I was going to be arguing on behalf of the 175, how many people actually plan to use these grams within the Telegram network? Otherwise, I think we've talked around this over and over.
There's maybe three.
Maybe three, Tone said.
Maybe three. Hey, I have
Then for those three, their grams shouldn't be dictated to be a goddamn security, and let them spend it.
That's right, actually.
I have one question. Is the United Housing versus Forman the reason why we now have co-ops, which are not exactly scammy, but they're right on that line?
There's a lot of co-ops that are really fucking scammy. Sorry, I dropped the F-bomb. If I hear one more person claim that they're legitimate because they're non-profit and not give me any other explanation, I might shoot somebody in the face with a shotgun.
Jason, I actually I agree with you. I think co-ops are scammy, but since I overuse the word scam, and I have now referred the word scam to an ICO printing their own money, so I try to be careful with using the word scam, but I know how bad co-ops are, so I'm saying they're right on the scam line, but I don't mind putting them over the line.
See, where I think co-ops and nonprofits take advantage of certain portions of the community is what we talked about earlier, Tone, in the mining pool case with the lady from Nevada. And that's affinity fraud, right? There's a certain number of the population out there that will give their money more easily to something that claims that they are a nonprofit or a co-op because it strikes a certain chord of legitimacy within that social group to make them believe that it's more legitimate if they are giving their money or make them feel better about it if it's a co-op or a nonprofit. Because how could a co-op or a nonprofit ever take advantage of anyone, ever?
And nothing ever happened bad in the Boy Scouts, right?
Oh, God, right.
And I'm an Eagle Scout, so there you go. Tony, we should talk about EOS for a second.
What's up?
We should talk about EOS for a moment.
EOS. Sure. We do have to wrap this up though. We've been on for 3.5 hours.
Next time.
No. You want to talk about EOS or you want to talk about what EOS did right that Telegram screwed up?
It's more than a few seconds. So why don't we talk about your cool background?
No, hold on. If he wants to talk about EOS, let him talk about EOS. The only reason I bring that up is that Adela, our Bitcoin Khaleesi, contacted me the other day and asked me if I wanted to participate in writing separation of powers components for a judiciary in EOS on a constitution there. So I'm curious to hear your thoughts.
That would be great because they need help with the constitution.
Now,
right.
That said, I'm gonna refresh my drink while I listen.
I'm gonna refresh my drink as well, but I will hear you. So my speaker goes to.
Yeah, it's like yeah, Gordon, we're here. We're really here.
Go on. I will hear you, Gordon.
All right, I'm gonna give the extremely short version, and this is the short version of the hour thing I did with Pavel. EOS did not, or Block One rather, did not actually issue any tokens to anyone. They took in a bunch of money. They reserved token spots on the Ethereum blockchain. They developed and published software for the EOS blockchain. But the mainnet, the first mainnet that actually stood up and implemented that software, it was launched by parties, several of them, other than Block One. And those parties sort of honored and implemented the reservation spots on the Ethereum blockchain that have been locked in at a certain point for those investors and issued the EOS tokens to them. So what we have here is the creator of the software, the one who took in the money, is not the one who actually issued the tokens. And the thing that issued the tokens wasn't a single entity either. It was a competing and changing and unstable large grouping that barely, even at the start, was a consortium or cartel. So you can't really apply Section 5, the registration requirement, to an issuer if there's no issuer. Or if you want to claim that the people actually launched the network were the issuer, really, which ones? Because there were a bunch of people who didn't go it along, had trouble doing it, and fought each other. It's more like a market rather than a common enterprise. And it was interesting. They didn't decentralize the network. They decentralized the launch or the boot of the network. So much so that I think the SEC, if they were being honest with the public, would admit that they didn't know what the hell to do with this. So they took their measly $23 million, which I think every single person involved in Block One spits at, and let them off. That's cool, by the way, Tom. Anyways, that's the short version.
My ice cubes.
That's hot, dude. I want that.
All right,
Anyways,
look, I will say,
that.
well, considering this is Dan Latimer's fourth scam, he's had plenty of practice and plenty of time to think about how to get around the SEC's laws.
It was his dad that came up with it. I found a post from his dad 2 years before the launch.
Oh, I'm not surprised.
Yeah, Stan.
Yeah, his dad's been scheming with him for a while. I'm moving on to tequila because I really don't want to drink through all my bottles. And at some point, I'm gonna need a new alcohol run sooner or later.
Where are you, John? I mean, really physically.
What's up?
Where is it? First of all, is that steaks in the fridge behind you over your right shoulder?
Yeah, and a tequila in the water bottle.
Okay, cool. So where are you these days?
I decided to stop disclosing my location for OPSEC reasons. So I am in a bunker, and I am working on residency arbitrage these days for multiple reasons.
Okay, I will respect that.
I'm still working on man, you know, getting a second passport is not that easy.
No. Well, it depends where you do it. But yeah.
I know. It really does. And between the
I think Bangladesh is not so hard.
which one?
Bangladesh.
I haven't thought about that one yet, though. I'll stand out there a little bit more.
No, well, don't rush into anything.
Okay, so
By the way, Cyprus is good. You can get citizenship fast.
yeah, but I'm too cheap, you know, just like you.
I got a Russian wife. I can't be cheap. I'm not allowed to be cheap.
I mean, yeah, no wife yet, but yeah, we'll get there eventually, I'm sure.
Yeah.
So yeah, EOS really, I mean, they got out cheap. They got out really cheap, and you're right. They managed to completely obscure the issuer from the you know, the common enterprise creating utility. And again, I question the utility of EOS, just like I question the utility of the Telegram token if they ever come around to building anything of use with their blockchain. And this is where, you know, I wish I can plead ignorance and buy into all this bullshit, but I can't. And I still argue against the utility of Ethereum. A smart contract platform will eventually function with the currency that currently exists, which is either Bitcoin or credit card. Like, you don't need.
Oh, credit card. That's an interesting comment. I haven't heard that before.
Sure, because there's very little. There's very few smart contracts that actually require decentralization. So at the end of the day, your smart contract is still being run by a centralized entity. So who cares if the method of payment is KYC? For 98% of payments for these smart contracts.
All right, so riddle me this. Take the EOS token. Assume you can't do a damn thing with it, but assume also that there's no one common enterprise behind it. It's just the network. So there, you know, no one's getting any direct or indirect benefit from anyone that was involved with its launch. No dividends, nothing.
But you can't put the genie back in the bottle, right? Somebody did benefit.
Sorry, yes, you can. You sure can, because what the whole thing with Hinman is that it's not the genie's out of the bottle. Sorry, you're not putting the genie back in the bottle, but Elvis has left the building, which is if something starts off as a security, but it loses its tether, pardon the pun, to the initial issuer by becoming sufficiently decentralized. So the issuer can't assume, if Satoshi showed up tomorrow, he could not assume control of Bitcoin.
Agreed.
Okay. So that Satoshi may have been the issuer of Bitcoin, hypothetically, and just run with it. But even if he showed up now, he couldn't do anything. So the issuer left. God left the garden. Now what do you do? And it's inherently obvious that if you don't have an issuer, you can't really have a security. Because then what's the security securing? An interest in what?
But wait a minute. Okay, so a couple of things there. One, the SEC can't go after Satoshi. They don't know who he is, but they can go after Dan Larimer and his dad because they know who they are, right? So right off the bat, EOS has a disadvantage in the fact that they weren't created by a magical god that no one can see. They have actual creators that benefited in multiple ways from its creation. So that creates a starting point.
Hold on, but the Laramers did not actually issue any EOS.
Allegedly.
It's not a shrug. They didn't.
Richard Hart.
A couple software that someone
actually-
can use.
Oh, wait a minute. We had Richard. I don't know if you watched the 5-hour marathon where Richard Hart was on this show. Richard
Yeah,
Hart.
you know, you didn't get anywhere with him because no one could.
So Richard Hart spent 3 hours on this show claiming that he is not the creator of X, but we all know he is, right? Like,
Yeah. Okay.
so,
Well, look, everything in life is a spectrum, right?
Right.
If you know Satoshi arrived from Mars, you know he came up with this.
Hold on a second.
Yeah.
Tone,
Hmm.
pull up that SEC explanation of APs again, shall we? And view the Laramers as APs and whether or not they would be subject to, at a minimum, some form of SEC involvement for being somebody that's relied upon.
an AP is a reasonable.
Responsible.
An AP is an AP is responsible for the development, improvement, or enhancement, operation, or promotion of the network, particularly if purchasers of the digital asset expect an AP to be performing or overseeing tasks that are necessary for the network or digital asset to achieve or retain its intended purpose or functionality.
All right. So right off the bat,
another paragraph in there that says merely publishing software does not make you an AP. Go on.
however, when you look at the promotion of the network,
Mhm.
that's where you can pull in somebody like Vitalik Buterin, or you can pull in somebody like the Laramers and say that to the extent that they are the figurehead that is out there promoting or advocating for that network, then that AP is somebody upon which you rely. Just like Bruce Fenton and Tron Black for Ravencoin, just like anybody else that's launched a coin and continuously advocates for that, just like Roger and Bitcoin Cash, right? There are certain figureheads that are APs that promote networks that become the focal point for attention. And whether that law is conceivably correct or should be correct, that people are relying upon them or not, this is an SEC publication that says that they are going to go after those people, just like, and I'm going to say it, and it's ridiculous, and Tone, you're going to laugh, just like it was ridiculous for the SEC to go after Steven Seagal. It is what they're doing. So we can talk about what should be. We can talk about what the law is supposed to be, and then we can talk about what the current environment is. And this is the current environment, right?
Yeah. Can we?
And they're getting results out of it. The SEC is getting results out of it.
Hey, Gord, I just want to make one more distinction between Satoshi, what Satoshi did, and what Laramers did. Satoshi released software to mine Bitcoin. And yes, he mined the first block, and maybe the second, and maybe the 7th and the 10th. And after the first 1,000 blocks, he had the majority. But he did not sell Bitcoin as an ICO, which somebody did. It wasn't, the network that sold the token, right? Like someone took in the Ethereum or the Bitcoin or the chickens or whatever the hell they sold you the ICO for, right? So you can't compare EOS to Bitcoin in any way, shape, or form.
You would actually just be in an argument that Satoshi is more of an AP than a Larimer.
At the time, yes, but Tone's argument is that if Satoshi were to show up today, what, if anything, could he do to impact the network? And the argument that he can't impact the network because it is such a autonomous a decentralized monster to where regardless of anything that he did, it wouldn't really have any kind of great effect or impact is what Tone is saying.
Well,
Versus today, the Larimers have a great impact on the EOS network, right?
Okay, so I got to challenge that one too. So the Larimers thought they did, okay, but they've been rebuffed again and again and again. Dan's new constitution rebuffed, which is probably why you're involved in actually doing it.
I'm not involved. I was asked to consider being involved, and I haven't accepted that yet.
Okay, that's why you were offered this because you're awesome, but also because Dan's proposed second constitution that he whipped out of his, you know what, everyone laughed at him. Also, there was that thing about reversing transactions that are fraudulent, and he tried to impose his view on the validators, and they said, go pound sand. They are autonomous from him now.
Can I play my own devil's advocate here? I'm going to say that if Dan Larimer decided to show up and try to take control of the Steemit network, which he created, he probably would not succeed. But that doesn't mean that the Steemit garbage is decentralized or a blockchain. It just means that Dan Larimer is now far enough removed from that particular insanity of a project that he can no longer take control of it, because now it's a fight between Justin Sun, who apparently bought it, and the few top Steemit holders that currently, can control the network. Now,
hold on a second. Let me call the timeout here. Sherry H in the user forum asked the question: if the U.S. sells stamps to raise money to support the postal service, and the stamps hold value, is the U.S. selling securities? And the answer is no, because the intent of the purchase of the stamps or the sales of the stamps is for use of the postal network, and that's where Forman comes in. Is that by using the thing that you purchase with the intent to use the thing that you purchase, it becomes a utility versus an investment contract. And the main purpose for selling is for use, not for speculation.
Can I add one more to that? And you can always sell those stamps back at the price listed on the stamp. So there is a floor value.
Yeah, well, unless it's a universal stamp that has because they sell universal stamps now, which are market rate stamps. So I could have purchased universal stamps 5 years ago at 35 cents or whatever they were then, and today they're at 55 cents or whatever it is to send first class, and I could see an arbitrage play in those universal stamps.
You actually just made an argument that stamps or securities, because one thing that happened with Telegram that got used against Telegram is they had in their white paper that the Telegram reserve would enforce what's called the reference price of the gram. And this was an algorithmically determined number. Whenever it was going below that, the foundation would spend money to bring up the price. So basically they were covering these initial investors' downside. So maybe the US Post Office, by always being willing to have a floor on the value of the stamps, it's either going to always be worth what the stamps were, or it'll be worth more on the open market.
No, I don't think that's right, Gordon, because you don't hear the U.S. Post Office saying that.
I was kind of joking.
Right. So what the universal stamp or the universal first class stamp says is, regardless of the price you paid for it, you can still send a first class letter with this stamp. But they've never said that they're going to use their inventory of stamps in order to manipulate the price, right?
I know, I was kidding. I was taking Tone's argument and kind of showing how this can all flip around like a wet seal.
So, well, can we get back to the Steemit thing, right? So just because Dan Larimer can show up back at the Steemit network and take control, that does not mean that Steemit is sufficiently decentralized, right? Because Justin Sun could take full control of that network, or if Justin Sun loses the battle because that garbage already split, then one other person or 3 other people can have control of the network, right? So it's not about the same person taking control. It's about the network being centralized by whatever, a takeover by whoever holds the most tokens of this proof of stake nonsense.
So there's okay, the standard is not on a blockchain. How do I say this? Look, even Hinman was too conservative, because gold may get mined out of the ground, but once it's out of the miner's hands and in the market, it's not tied to the fortunes of the originating issuer anymore. It stands on its own two legs. And you can have a two-person gold market, and that would still be true. The thing is, when the moment that no one is in effective control by themselves, or in like sort of contractual collusion with someone else, you don't have decentralization in the network sense. Like, but you do have the lack of a common enterprise of sufficient mass that you can hold someone accountable for the performance, that someone takes over responsibility for something and turns it back into a security. I see wheels turning.
Jason, you want to take this one?
I mean, is someone like, is Justice now reissuing Steam because he has power? I mean, it doesn't make any sense.
Well, I want to go back to your gold example because I'm not quite sure I'm following. And maybe that's because of my consumption of quinine today.
Yeah.
I'm a little confused with the gold example as well, but I also think that in the case of gold, one of the things that regulators can kind of admit is the fact that once gold is actually outside of the mine that mined it, it really becomes a bearer asset. Like, you can't trace ownership of physical gold. It becomes incredibly difficult, right? And I believe,
but unlike gold,
who cares?
Unlike gold, and one of the topics we didn't get to is the in-rem actions against Bitcoin wallet addresses, where you can actually track Bitcoin and who holds it at what point in time through chain analysis, et cetera. And that the government has filed multiple claims against over 100 wallets to claim that the contents of those wallets are forfeit through that in-rem action. And so this kind of goes to the question of, could you do this with gold? And the answer is, well, not easily, right? You could say that any gold issued out of Nazi Germany is no longer valid and shouldn't be sold on the market, but that doesn't keep somebody from saying, screw it, I'm going to melt it down and convert it into something else, right? But unlike that, you can actually track when Bitcoin is, quote, melted down or mixed, and do enough analysis to know where it came from and where it's gone in order to track that nefarious activity. So this is really interesting.
And again,
so the way I would screw up the United States is if I had one of those wallets, I would take one Satoshi and airdrop every other wallet on the planet.
Oh, that was done. Gordon, that's exactly what happened in 2017 when the big blockers spammed the Bitcoin blockchain. And I know this for a fact, that they spammed old wallets that they thought no one will ever use again with one Satoshi each. And when I looked at one of my old wallets, it had one Satoshi coming into it when no one knew the public key of that address, no one except me. And it literally, the transaction was heavier in size than was in the last Bcash block. That's how heavy these transactions were. So they were doing that already, okay? But so I'm still pissed about that one.
You should be pissed that the U.S. government is claiming this, the stupid taint argument that one bad thing naturally infects everything around it as opposed to the other way around, or things just maintaining their autonomous state. That's a theme with everything.
But here was my point.
Hold on, Tone. Let's let the lawyer speak for a second. Gordon, on that taint component, I'm curious. where your thoughts are on cryptocurrency and subsequent purchasers in good faith, and whether or not that argument under the UCC could remove taint from subsequent purchasers of Bitcoin in good faith from potentially ill-gotten original Bitcoin transactions.
Good question. So I'm approached this with two forks. One fork, despite what you just said, is I let go of my lawyer hat and go, what actually makes sense for humanity? And the other fork is, what's the law? You know, what makes sense for humanity? It absolutely does not make sense that an innocent purchaser or receiver of Bitcoin, this great thing, is going to have to live under some kind of random cloud because somewhere along the blockchain, Attila the Hun was living. It is not how we want to live our lives. You know, regardless of the nuance of the law, because I know we're going to actually go there, but it is not effective for the beneficial organization of human affairs to have a rule like that. Just like it's not beneficial for the organization of human affairs, these stupid positions the SEC are taking that are anti-innovation. Now, from a legal perspective, unfortunately, I don't think Bitcoin falls within the definition of a Section 2 negotiable instrument. But to Tone's point, it's bearer instrument like, except that there's a freaking long tail from the origin with blockchain. So
yeah, the long tail origin is really the problematic piece of that, right? I mean, to the extent that you know, let's say my neighbor sells me a car, he has title, or he's got a title that's been signed over by the owner. And I don't know how he got a title signed over by the owner, but I purchased the title and I purchased the car and I go to DMV and I say, I am now the owner of the car because I have a title that's been signed over and I purchased it, et cetera, et cetera. That car can still be taken away from me if it's shown that the title was obtained fraudulently or through theft. And then not only am I out my money, but I'm out my car, right? So we have some historical reference to show that subsequent purchasers in good faith can be screwed out of a deal by buying stolen property that they believed to be legitimate but ended up not being. And from that chain of title standpoint, we have that. Going back to the original pre-show question with Tone, which was who out of these 113 people that are being sued, 113 wallets that are being sued in an in-rem action would actually stand up and defend that they are the rightful owners. It becomes very much a question of, you know, cost-benefit analysis and opportunity cost of how much do you stand up and say, no, my one of 113 wallets is mine. Nothing I did within that wallet supports an in-rem action for illegal activity. And now you have to stand there and reveal yourself to the government that you are a rightful holder and that your activities were legitimate in order to maintain control of that account. Versus what? I mean, this is aggressive action. This is aggressive taking in an in-rem action by the government to say these 113 wallets are now property of the government, and any action against that is theft. It's
okay, but they're claiming that they don't have the keys, right?
Of course they don't have the keys. What they're claiming is that these 113 wallets are somehow connected with some form of illegal activity, which then, just like if you got pulled over in a car and there was $20,000 in it, they could say that $20,000 allegedly was used for illegal activity. The authorities make a claim against that $20,000 to claim that it's theirs, and then you have to defend how it's legitimate, right? That's an in-rem action.
Oh, yeah.
And they're doing the same thing here. And what they're counting on is that not a single person will stand up and defend against this. Now, interestingly, and without naming names, I had a potential client who I shall not name contact me because he was notified specifically and individually by the government that he was subject to an in-rem action and had been identified and associated with one of the wallets in one of these actions, giving him the opportunity to defend himself.
That's interesting.
So he had a couple of options, right? He actually stood up and said, yes, I own that wallet, right?
Yeah.
You can affirm, yes, I own that wallet. Now that's subjection to potential criminal claims later on down the line. Or yes, I own that wallet, and nothing that I did was illegal. Well, now he's under a microscope for every single activity that he's ever done, or for tax purposes, or for anything else. It's an interesting bully move when the government is able to, through chain analysis, identify certain wallets that have been associated with illegal activity from time immemorial. That Bitcoin associated with illegal activity is now tainted ad infinitum, right? There has to be a moment where it's no longer tainted, and I don't know what that is, and I don't think that's been defined.
Well, let me integrate your two ideas and go to a very scary place, which is, there's kind of a policy argument or an equities argument why a holder in good due course of your car.
Wait. Did you say Paul's-Graphian argument? I love the Paul's-Graphian chain.
No, I wish I said that because I'm happy to rest, an equities type argument.
Okay.
So with the car, you have a non-fungible item. You have something that's not rapidly traded between individuals all the time. And you have
chain of title, you have a government title office, etc. Sure.
Right.
But would you agree? Hold
on, let me get there.
That the Bitcoin blockchain is in itself inherently, systemically, a chain of title office?
Yes, and what I was going to say was, what happens when negotiable instruments are on the blockchain? Does that whole Title II holder in due course go away? Because the policy reasons for it just disappeared.
Maybe, right? Because the whole idea of chain of title, of which Bitcoin relies upon, at its core, it relies upon chain of title, right?
Well, actually, I'm going to dial back a little bit. It's not necessarily chain of title; it's chain of access. Because you have things like exchanges and trusts and custodianships and all that other stuff. So we got to maintain a little bit of distance between the physical reality of what that predicate gives you and the legal consequence of it. But it's like a neighbor of title, like they're good friends, right? And maybe it produces a rebuttable presumption of title.
I'll float with the rebuttable presumption, certainly.
Okay.
But there's no way that the United States could actually file any action against any of this property without there being some form of component of title origination.
Well, I don't know. If there's $1 million that was made on a drug deal and I have it in my possession, I'm not totally clear whether I have title, but I'm pretty sure I can be subject to, or it can be subject to an in rem.
Yes, absolutely, because that amount of money and those serial numbers, if identified, are 100% associated with that activity. The difference between a US dollar and a Bitcoin transaction is that a US dollar, while it has a serial number, is not actively scanned for every transaction that it's involved in.
Yes.
But a Bitcoin transaction is.
Yeah.
Every single one, by necessity for the functioning of the network, which creates an interesting problem and advantage, the advantage going to the government, where it can say, we know that this wallet was involved in some illegal context, and therefore all of the value within that wallet and every Bitcoin that was received into that wallet and left that wallet are now tainted and are ours. And anybody that tries to spend that or uses that is now, based on this in rem action, taking property from the government. It is a nasty little news.
Yeah, I think it's time for 5 flags.
I'm sorry?
You know about 5 flags? You have your residence somewhere, you have your business somewhere else, you have title, it's a way of diversifying. Actually, this kind of tones two passports concept. There used to be 5 flags, like you
live in one place, you have your passport in another place, your business is domiciled in another place, and the banking system that you use is in a 4th place. Yeah.
And now I think it's up to 7 flags because you have your digital identity somewhere else too. And now maybe, your crypto is somewhere else. So.
Oh yeah, no. When I have kids, I'm gonna make sure. Hey, when you're on social media, use an alias name, and start off with that. Don't use your real name. Just use your alias.
What happened
name.
to me on Instagram? That freaking Nigerians make Gordon Einstein _, and those bastards have more followers than I do. That's not fair. The scam copy account is more popular than me.
That's a problem. Like at least my scammers have way less followers. The Instagram is a problem because I only have 2,000 on Instagram, so I have to build up mine. But yeah, that's an issue. And man, like everything I ever do across any social media, like 10 Telegram scam token tweets follow. It's insane.
Yep.
All right, hey guys.
All right, big guy. You know what? It's been great. I gotta go. I'm not drinking. You guys aren't. I feel bad about that.
Yeah, no, we do have to wrap this up. It's been about 4 hours, and I had so much shit to do tonight, which is not happening at this point. But hey, guys, thanks so much for joining. Gordon, thank you for coming back.
Sure, thank you.
Haven't joined us, and we'll do this again maybe in a week or two. We'll come up with new topics. I'm sure there's always things interesting going on. Even like the coronavirus is not going to slow down the SEC or the CFTC. They're going to keep going at it, and plenty of cases for us to cover. Thank you guys for joining.
Gordon, great to vamp with you. Great to do a little mental exercise. As always, I enjoy that more than you know.
Are you a fan of monkey shoulder scotch? Are you a fan of scotch?
I am a fan of scotch. I am not a fan of the monkey shoulder. It's a little too harsh for me. I'll take a balcony double wood any day of the week, but
okay, fair enough. So the next time we do this, and will you not join me in monkey shoulder, but will you join me in whiskey of scotch?
Certainly. I'll forego the quinine for that.
You're an awesome person.
Okay. For that deal. All right. Thanks, Gordon. Have a great night.
Seeing you guys. It was fun. It was good.
All right. Cheers.
Cheers. Bye-bye.
All right. Bye, guys. Hey, thank you all so much for watching. It's been another episode of the Bitcoin Law Review. I think I'm going to skip the market analysis today. We will do it first thing in the morning, maybe second thing in the morning. I'm speaking at a, hold on, let me, for the 3 people that stuck around with us for God knows how long, there is a online conference that I'm speaking at tomorrow. What is it? It should have been on my calendar. Oh, this is so not happening. Anyway, I'll probably tweet it out in the morning. I'm speaking somewhere tomorrow on the internet. I've been too busy to really pay attention, but I do have a presentation to do at around 7 in the morning Eastern time, and I will go ahead and do that. But for now, thank you all so much for watching, and I will see you all on the next episode of something. Bye, guys.